So do we want to take? The committee will come to order. Without objection, the chair is authorized to declare a recess of the committee at any time. This hearing is entitled "The Community Reinvestment Act. Is the OCC Undermining the Law's Purpose and Content?" I now recognize myself for 4 minutes to give an opening statement. Today, this committee convenes for a hearing to conduct oversight of the Office of the Comptroller of the Currency, including to review its approach to overhauling the Community Reinvestment Act. Comptroller Otting, welcome back. I'm pleased that this committee will finally be able to hear from you soon after you missed our last hearing in December. The Community Reinvestment Act is an important law that was enacted to combat redlining and to ensure that banks make responsible investments in the communities where they are chartered. Unfortunately, the OCC has put forth a rule that runs contrary to the purpose of the CRA and would lead to widespread bank disinvestment from low and moderate communities throughout the country. Comptroller Otting's proposal, which closely follows the recommendations made by his former bank colleague and now Secretary of the Treasury, Stephen Mnuchin, would allow banks to skate by and do the bare minimum for a passing grade. Banks would claim CRA credit for investing in sports stadiums and bridges to nowhere. It would also allow banks to earn failing grades in nearly half of their CRA assessment races and will pass their overall CRA exam. Any serious update to the CRA regulations would set out to strengthen the law. Comptroller Otting's proposal instead does the opposite. Under Comptroller Otting, the Community Reinvestment Act would become the Community Disinvestment Act. Such a radical change to the CRA demands a heightened level of public scrutiny, but Comptroller Otting appears determined to push this through as quickly as possible. The Comptroller is only allowing for a 60-day comment period, which will expire in early March. This is simply unacceptable. Before the proposal was released, all 34 Democrats on this committee wrote to Comptroller Otting and other bank regulators, calling on them at a minimum to provide a public comment period of at least 120 days for any proposal reforming the CRA. Since that time, community banks and others have also asked for a 120-day comment period. So in the past, the OCC has provided 120 days, if not longer, for the public to comment on bank capital rules, and there's no reason why this important CRA rulemaking should be treated differently. Of course, no one should be surprised. Prior to assuming their respective government roles, Comptroller Otting and Secretary Mnuchin served as CEO and chairman of the board, respectively, at One West Bank, which the federal government alleges engaged in redlining. It has also been widely reported that when Mr. Otting was at the helm, One West attempted to game the public comment process when the bank was applying to merge with CIT Bank. A 2018 media investigation uncovered hundreds of fake comment letters on the merger, with texts originating from One West. There are other issues I'm also concerned about, including the OCC's efforts to deregulate mega banks and its actions to greenlight rent-a-bank schemes that allow lenders to skirt state usury laws. I look forward to hearing from Comptroller Otting and his testimony today. The chair now recognizes the ranking member of the committee, the gentleman from North Carolina, Mr. McHenry, for 4 minutes for an opening statement.
Well, thank you, Chairwoman Waters, and thank you, Comptroller Otting, for being here. I'd like to take a moment to first recognize the newest member of our committee, Congressman Van Taylor of Plano, Texas. Van, we welcome you to the committee, and I will also counsel you that not all hearings are quite as interesting as this one. Is that right, Chairwoman Waters? But we thank you. We know that we have got quite a Texas contingent here on the committee, and so I won't make any Texas jokes. So with that, Comptroller Otting, I applaud you and FDIC Chair McWilliams for your efforts to reform and modernize the Community Reinvestment Act. This is a long time coming. It's been 40 years since the CRA was enacted, and a lot has changed in the banking industry, much of it driven by technology. The rise of mobile and online banking helps more consumers and communities that the CRA was intended to serve. And so this proposal takes those developments into account in the changing nature of banking. The current CRA regulations are outdated and technologically ineffective. It is an analog approach to a digital world. That needs to change. Your proposal moves us in the right direction. The FDIC and OCC's proposal seeks to modernize the CRA to ensure it meets the current needs of communities and financial institutions alike. The proposal update will increase the transparency and objectivity that is currently lacking in CRA examinations today and will increase the effectiveness of the statute generally. We can no longer measure a bank's commitment to its community based off the number of physical branches it has. While branch banking remains important and remains an important part of serving customers, there's been a significant growth in the demand for digital banking services, especially in the post-crisis era. As demographic shifts and millennial customers, even millennials, customers become more essential to a financial institution's long-term viability, the demand for financial technology increases. Today, there's a growing focus on a refined online and mobile banking model that incorporates sophisticated data collection capabilities to deliver more personalized and engaging experiences. As banks' lending presence expands beyond their physical locations because of technology, we need to ensure that our regulation also involves and evolves that changing nature. These reforms will addressed in the CRA review will address CRA hotspots by encouraging internet-only banks such as those headquartered in Salt Lake City, Wilmington, Delaware, or Sioux City, South Dakota, to push portions of their CRA activities to where they take deposits, including communities that need them the most. In fact, in 2019, a survey conducted by the American Bankers Association titled How Americans Bank, online and mobile banking methods are used most often. Approximately 73% of consumers preferred financial services provided to them digitally, compared to 17% who prefer going to a branch, or 6% who use ATMs, or 3% who bank over the phone, or 1% who bank through the mail. I'd like to know who those 1% are. Digital transformation is one of the top trends in the retail banking industry. Retail banks understand the power of fintech and how essential it is to their success. They realize that going digital is more than a marketing strategy, it is a fundamental shift. And so I'm encouraged by the CRA proposal and what it will do to more effectively help low and moderate income consumers and communities. I look forward to hearing today. Thank you for your testimony and look forward to the questions.
The chair now recognizes the chair of the Subcommittee on Consumer Protection and Financial Institutions, Mr. Meeks, for 1 minute.
Thank you, Chairwoman Waters. Comptroller Otting, the CRA was a civil rights bill meant to redress the legacy of redlining and discrimination in banking. And today, there is still ample evidence of continued redlining, banking deserts, asymmetrical access to mortgages, and loans for low and moderate income communities and communities of color. But your proposal decouples CRA from outcomes for intended communities, discounts the value of direct lending and mortgages to low and moderate income communities and communities of color, cuts out community organizations that work directly with these targeted communities, and is just not supported by data. In fact, your proposal is so flawed that covered banks are telling us that they see it as a very bad rulemaking that may be unworkable and undermines their CRA work. Fintech banks are telling us it is completely flawed and demonstrates a failed understanding of how their business models work. And community groups say it is a betrayal of the original intent of CRA. So I say congratulations on one thing, you've unified them all.
The chair now recognizes the ranking member of the subcommittee, Mr. Luetkemeyer, for 1 minute.
Thank you, Madam Chair. Today we're here to discuss the Community Reinvestment Act, and I stress the word community, because this also, not only do we look at investing in homes and that sort of thing, we also look at investing in communities. And I think this is where we need to look at the changes that are being made here and how important they are to the financial services industry from the standpoint that getting credit for helping churches and hospitals and schools and small businesses that provide jobs to these communities is vitally important to be able to have a community that has the services where people want to live and jobs where they want to live. So I thank the chairman for his hard work, or the comptroller for his hard work, and the FDIC for working with him to modernize and clarify the CRA. Also in the past, this law has been used to beat banks over the head and used inappropriately, and I think he addresses some of these things. The proposal is not perfect, and I think anybody who wants to make some suggestions could quit throwing rocks and start doing things in a productive way by suggesting positive solutions. With that, Mr. Otting, thank you for being here today. I look forward to the questions.
I want to welcome today's witness, Mr. Joseph M. Otting, the Comptroller of the Currency. Mr. Otting has served in his current position since 2017. Prior to his appointment, Mr. Otting served as CEO of OneWest before its acquisition by CIT and served briefly as its leader. Mr. Otting has testified before the committee previously, and I believe he needs no further introduction. Comptroller Otting, without objection, your written statement will be made part of the record. You will have 5 minutes to summarize your testimony. When you have 1 minute remaining, a yellow light will appear. At that time, I would ask you to wrap up your testimony so we can be respectful of the committee members' time. Comptroller Otting, you are now recognized for 5 minutes to present your oral testimony.
Thank you, and good morning, Chairman Waters, Ranking Member McHenry, and members of the committee. Allow me to reintroduce myself to the committee. I was born in Maquoketa, Iowa, a city of 6,000. As of 2017, Maquoketa had a 19% poverty rate and median household income of $46,000. In Maquoketa, Clinton Machine Company manufactured small engines and by 1956 became the 10th largest employer in Iowa. By 1999, there were only 35 employees left, and my hometown's largest employer closed its doors. The farm crisis of the 1980s further devastated the community and forced the closing of downtown businesses, which was further influenced by a recession. I have seen firsthand what farming communities when large businesses shut down and when small and family farms do not have access to credit. My first banking job took me to California in 1981. I was fortunate to meet my wife Bonnie at another bank, a second-generation Hispanic American of Mexican descent, born and raised in East Los Angeles. My father-in-law labored at a factory and worked hard to support his family. When I talk about low and moderate income communities, I'm not talking about some esoteric concept. On the contrary, I'm talking about an area that I grew up, America's rural farmland, in an area where my wife grew up, East Los Angeles. Because I know and care about these communities, it is my intent to strengthen CRA, not weaken it. During my banking career, I saw firsthand how CRA can be improved. The goal for improving CRA rules is very clear, to encourage banks to do more. I am confident that this proposal can achieve that goal by making 4 basic improvements. Clarify what counts, clarify where it counts, measure CRA performance objectively, and make reporting transparent and timely. I'd like to walk you through the process that led to this proposal. This proposal was informed by agencies' Agrippa reports to Congress in 2007 and 2017, public hearings 10 years ago, recommendations published by the Treasury Department in 2018, extensive feedback gathered through meetings and tours involving thousands and more than 1,500 comments in response to our advance notice of proposed rulemaking in August of 2018. I have personally read each of the 1,500 comments received in the AMPR. This has been a lengthy and transparent process and has been consistent with the letter and spirit of the Administrative Procedures Act. All of this work resulted in feedback supporting CRA modernization, with 94% of AMPR respondents saying CRA today lacks objectivity, transparency, and fairness. 98% think the rules are implied inconsistency, and 88% say the framework is hard to understand. Let me describe what the proposal does not do, because there is a lot of misunderstanding about its intent. One of the key claims against the proposal is that it would permit redlining. This is blatantly false. Nothing in this proposal changes the agency's authority to enforce fair lending laws to prevent discrimination and redlining. The regulations implementing the Fair Housing Act and the Equal Credit Opportunity Act prohibit discrimination and redlining. These regulations are not changed any way by this proposal. The next erroneous assertion is that the proposal contains a single metric to create a bank CR rating. That too is incorrect. The proposal would require examiners to use a retail lending test for each major type of product identical to that described in Governor Brainerd's speech. In addition, examiners would evaluate the impact of a bank CRA's activity by measuring the dollar value of that activity in each assessment area and at the overall bank. Then examiners would apply discretion in considering performance context to assign a final rating. For regional banks that involve hundreds of measures, for larger banks, this would involve thousands, no single metric. Another assertion is that the proposal does not faithfully implement the statute. On the contrary, each of the activities listed in the proposal would directly satisfy the statute purpose. More of the proposal closes loopholes that exist today by granting CRA credit to loans for wealthy people who buy homes in low to moderate income area. Another erroneous assertion is the proposal would take away the incentive banks to maintain branches. This will be the first time in the regulation where a bank will be rewarded to maintain LMI branches. Another misinterpretation is that a bank could receive a CRA rating even if it fails to have a satisfactory rating in half of its assessment areas. The proposal specifically asks what thresholds should be used, including whether that threshold should be as high as 80%. And lastly, let me address the issue of sports stadiums qualifying for CRA, which has been very topical. Under the current law, banks have received credit for financing sports stadiums since 1993 and other renewal projects in LMI communities. This is not new. This is a false statement. The proposal would not change that, but we're open to comments. What this proposal does is to clarify the approach by providing for the first time since 1977 a list for communities and banks to understand what qualifies for CRA. My only ask of those interested in commenting on the merits of the proposal is to actually read the proposal and not rely on sound bites. These issues are too important to be debated based on sound bites. Thank you for this.
Your time has expired. Thank you very much. I recognize myself for 5 minutes for questions. Well, let me just get right to the first point. Your proposal only provides 60-day comment period for stakeholders to review the proposal of the CRA. And we've all asked you if you would extend that for 120 days for review. What have you decided?
We've decided that we will not extend that date. And as a point of clarification for you, we published that document on December 9th. And by the conclusion of March 9th, that'll be 88 days.
Is it true that in the past, OCC has provided 120-day comment period on important bank capital rules? Then even extended to 60 more days?
The vast majority of comment
Do you
periods are 60
consider this a very important proposal? Very, very important, given that you're making significant changes in CRA? Do you consider it very important?
I do consider it very important.
But you don't consider it important enough to have a 120-day comment
All 30
period?
days in the reg text should be able to understood by
Okay,
people.
so you have decided that you're not going to do that.
That is correct.
I'm concerned that under your plan, banks that get a failing grade in up to 50% of their assessment areas would still pass their overall CRA examination. Is that right?
That is not correct.
Okay, and you plan to stick with that?
That is not correct, as I said.
It is not correct?
That is correct, ma'am.
50%?
It is not correct.
Correct me.
Well, today, as an example, a regional bank that has 276 assessment areas, the banks currently evaluate only, as regulators, we evaluate 40, so that's about 15%. We are proposing that we evaluate all 276 going forward. We asked the question, should we allow 50% of the assessment areas to pass or 80%? We're looking for feedback and comment from the communities and banks on that issue.
Thank you very much. Have you been able to reconcile the differences with the feds?
With the who?
With the feds?
We haven't been able to reconcile the differences with the Fed.
So they're still opposed?
There's what?
They're still opposed to your proposal?
I don't know if they're opposed.
Do they support your proposal?
Governor Leo Brainerd did not
Do you know that they do not support your proposal?
Governor Leo Brainerd did not sign on to the proposal.
Okay, I'm worried about that your proposal dilutes the focus of CRA on meaningful investments in low and moderate income communities. For example, under the new proposal, you alluded to this, but athletic stadiums located in low income community tracts in opportunity zones would explicitly be CRA eligible with little regard for how LMI communities would be helped. Is that correct?
Since 1993, CRA has allowed sports facilities to be included in CRA. We've put it out for comment to get feedback. And the most important thing
So
is,
you don't think that should be changed at
the
all?
most important thing is we produced a list of 200 items, and the whole point of producing that list was to gain feedback through this process about
Okay.
what people thought was effective and
I
not
get it.
effective.
Your plan is also bad news for rural areas, as a loan to a family farm with gross annual revenues of $10 million would qualify as a CRA qualified activity. According to USDA, only about 1% of farms had sales of $5 million or more, let alone $10 million you propose. Therefore, it seems like this approach would divert lending away from small family farms. Are you aware of that?
I'm aware of, but I don't think the $10 million is a correct number. What we've done is we've risen from $500,000 to $2 million for family farm
Okay,
loans.
so, Mr. Otting, basically you've decided that you know best about everything that has to do with CRA reform. You do not wish to work with us. We came to the board meeting over at FDIC, and we let our position be known in addition to all of the letters and the work that the advocates have been doing. But you have decided you will work with no one, that this is your proposal, this is what you want, this is what we get. Forget about the Congress of the United States or anybody else, that you know better than anybody else. And as I remember, we told you about what it takes in minority communities and why CRA is so important. We told you about discrimination. You said you had personally never observed it. Do you still maintain that you don't know about discrimination?
I didn't say I don't know about it.
You said you had never observed it. Is that
I
right?
personally have never observed it, but
Okay, do
in
you
conjunction
still,
with that
do you
quote,
stick
I
to
said,
that,
my
that you have
family
never
has
observed
advised
it?
me that has occurred.
You have never
Please let me
observed
respond to your
discrimination?
question.
Is
Please
that
let me
correct?
respond to your
You
question.
have never observed
I
discrimination?
have not personally
Is that
observed
correct?
it, but my family has.
All of the work that you did with One West
Can I
Bank,
personally
all
answer-
of the
Can I
loans
personally-
that
can
you
I
were
answer your
involved in,
question?
you have never observed discrimination. Is that right?
I have personally never observed it, but I would say I know it happens in America. My family has told me it happens. My friends have told me it happens. In my professional capacity as comptroller, I've observed it occurring.
Well,
I think
thank
it's
you very much.
disgusting,
My
and
time
there's
is
no
up.
place- There's
And
no place in
I'm so
America for
pleased
that.
that your family told you about it, and today I'm telling you about it. Thank you very much.
Thank you.
I will now recognize the gentleman from North Carolina, Ranking Member Mr. McHenry.
Comptroller Otting, thank you for being here today. Community Reinvestment Act was passed in 1977. When was the last time it was updated? We had a major regulatory update to the CRA.
Created in 1997 and last updated in 1995.
95.
Yes.
Has much changed in banking since 1995?
Significantly. We, originally when the statute was passed, we didn't have interstate banking. No one could even conceptualize of internet banking or mail banking, where people are more and more not going into a branch now and are seeking financial services via the internet.
So we have half the number of community banks, less than half the number of banks in America than we did in 1995. That's number one. Do we have more branches or fewer branches over the last 25 years?
Substantially fewer.
Okay, so, but CRA is designed around physical infrastructure according to the 1995 regulation. Is that true?
That is correct.
So what does that mean? What does that actually mean? So you have a bank that's a mainly internet bank, headquartered in Salt Lake City, and they do, let's say they do 10% of their business in a state like New York or California. Where do they spend their CRA credits?
They spend the money in Salt Lake City.
Why?
Because that is where their assessment area is domiciled, because it's considered where their headquarters is.
So that's not where their business is, though.
That is not.
Okay, so how have you changed these regulations?
We're changing the regulation that if an institution gathers more than 50% of their deposits outside their assessment area, those that have 5% or more would be deemed assessment areas. And so one particular entity in Salt Lake City, 8% are in Los Angeles, 5% are in Dallas, 12% is in New York. Those will be deemed assessment areas, and dollars will flow into those communities that aren't today.
So this is mainly a rewrite about technology and a dramatically changed footprint for banking.
One component of it, yes.
Okay. What else would you call? What other components?
Well, go back to, we're giving people identification what actually qualifies for CRA. There has never been a list produced. We're actually focusing banks to do 100% of their assessment areas today. And so instead of doing a portion of it, we'll look at 100% of their assessment areas. And we're giving them an objective way, not only for community groups, civil rights, and banks, to be able to measure those institutions on their performance in the markets to which they
So
operate.
how long have you been comptroller?
I've been the comptroller for about 2.5 years.
Okay, and has the OCC, the FDIC, the Fed, have they had a conversation just because the last 2.5 years? How long is this
Been going on
process?
for 10 years. The statistics, as we quoted, over 90% of the people feel it's outdated, doesn't give clarity, doesn't give measurement techniques. It's been screaming out to fix this for 10 years. And people haven't taken action.
So joint rulemaking is between you and the the OCC and the FDIC. Is that correct?
This particular rule, correct.
Okay, on this particular rule. And in terms of regulation, what part of the federal banking footprint does that cover for CRA?
For CRA, it covers 85%.
85%.
85% of all assets covered under CRA are covered by the OCC and the FDIC.
Okay, but the FDIC has that remaining less than 15%.
The Federal Reserve has the remaining 15%.
I'm sorry, the Federal Reserve, I misspoke. So, Federal Reserve. So, along this process over the last 2.5 years of your undertaking, have you engaged with the Federal Reserve?
Thousands of times.
Okay. Have you incorporated the Federal Reserve? Have you and your team incorporated Federal Reserve's feedback and perspective in this proposed rule?
Not only did we incorporate it, we actually made a big component of it, of the framework that the Federal Reserve actually came up with. We thought it was good. In the individual assessment areas that will look at a bank's performance in low to moderate income by numbers, we'll compare that to the low to moderate population and then the overall low to moderate income lending in that market. And a bank would have to, meet a certain standards. That was strictly the Feds. We had a different way at the OCC how to approach that. And because of their thought process, we integrated that into the NPR.
Right. So you're covering 85%. You've given a great deal of clarity in this rulemaking on what qualifies for CRA credit. So not only what you must do in terms of regulation, but also the measurement by which you will be held to account. So this is a great deal about regulatory certainty, is it not?
It is.
Okay. So thank you for your testimony. Thank you for your openness in this process. Thank you for hearing this feedback. And thank you and the career staff, especially, for being measured about this proposal.
Thank you.
The gentlewoman from New York, Ms. Velasquez, is recognized for 5 minutes.
Yes, good morning, sir. Thank you for being here. I would like to follow the line of questioning of the chair, and I would like to ask you, do you commit to delaying your proposal until CRA advocates and consumer groups feel their voices have been sufficiently heard and the Fed has also agreed sign on?
I do not.
Comptroller Otting, CRA stakeholders have stated that commenting on the OCC and the FDIC's proposal is difficult due to the lack of data and analysis found in the proposal. particularly as it relates to the threshold for measuring CRA performance. What do you say to that?
Do you know how the data is currently compiled in CRA?
No, I do not, but let me ask you, so that we could have a better understanding, not only the members of this committee, but the communities that we represent, particularly LMI communities. Would you share the underlying data that was used and what analysis was conducted in developing this performance threshold?
It's important to note, I asked you the question
I'm asking a yes or no question. Would you share with this committee?
The question is, you have to understand that there is no data today. You have to go individual PE by PE. There's 6,000 of them. The Fed went through those. We went through those and pulled that data together. The information
I'm asking specifically the data on the rule.
Some of the information comes from the FFIEC, which is not public information. That's
Why is not?
Because it's confidential supervisory information.
So what type of analysis was conducted to measure the proposal's impact on CRA lending and investment in LMI communities? Can this analysis be shared with this committee?
So when we look at a bank's performance in CRA, we look at small business lending, farm lending, we look at the HMDA data that they do their residential mortgage lending, and then we look at the community development, and we try to make an assessment on our new proposal. What do they have on their balance sheet in relationship to their deposits? We've done that analysis. We think that's what got us to get directionally correct on the outstanding satisfactory level, and now we've gone out from the banks to request that information to validate that. So I'd be happy to come by your office once we get that data and that analysis completed, but it is not something we would put out for public distribution.
So, Madam Chair, I agree with everything that you stated before, and I believe that we should request the data and analysis used to create this rule, and if not, if they don't want to share it willingly so that we could do our job, then we should subpoena such information.
Will you yield?
Yes, sir. Yes.
Thank you very much. I don't think that Mr. Otting is serious about his willingness to cooperate with us. As I said before, I think he believes that he knows better than any of us, and he does not have to work with the members of Congress. You're absolutely correct. If we have to subpoena the information, we will do that. With that, the gentleman from Missouri, Mr. Luetkemeyer, is recognized for 5 minutes.
Fine. I haven't finished.
Oh, I'm sorry, I yield back.
Thank you.
Thank you.
I yield back.
Controller, while I believe the CRA must help provide more funding for community development projects like public housing, I'm very concerned that the single metric evaluation measure included in your proposal will lead to a substantial dilution of other core CRA requirements and will enable banks to focus only a small number of large, easy projects to meet their CRA responsibilities. What safeguards are included in your proposal to ensure this will not happen?
Yeah, at every individual assessment area, we will look at the actual volume of units and that institution completed. We will look at the volume of units that the competition have done, and we will look at the population of low to moderate income. And there's a criteria to which they have to do to meet a satisfactory level. So it's impossible, absolutely impossible to do what you described.
Well, that is not what the CRA experts that came before this committee stated. And that is why it's so important, sir. I control the time. That is why it's so important that you expand the time to 120 days. Thank you. I yield back.
The gentleman from Missouri, Mr. Luetkemeyer, is recognized for 5 minutes.
Thank you, Madam Chair. And I certainly am disappointed that we allow the integrity of the witness to be questioned. I think it's below the comportment of this committee. I think that the gentlelady from New York should be called out for something like that, but I will move on. Mr. Otting, thank you for being here this morning. I'm probably one of the 2 guys on this committee that actually filled out a CRA report. I've done this, I did it many years when I was in the bank at home. I understand this does need some changes. It does need some reform. It is not a very good report from the standpoint of how it actually should measure the investments that banks make into the communities. It does not incentivize them the way it's presently structured, and especially not in today's world. So thank you for what you're doing. I know one of the concerns that has been leveled this morning is that they think the rule is going to disincentivize mortgage lending in favor of community development. Now, I've got a point to make, and then I want you to answer that question. This is the Community Reinvestment Act. It's not the Housing Investment Act. I realize that the law was put in place to stop redlining, which is a laudable goal, and we should not allow that to happen. But it also was there to incentivize banks to invest in communities, because communities are where people want to live, where they have services such as churches and schools and hospitals and community centers, and they want to have small businesses that can actually create jobs so they can live in their community where they want to work. So if you don't have those businesses and services incentivized, you don't have a community. That's where I think the Community Reinvestment Act comes in. It wants to build a community and not just focus on housing, which is an important part of this. And if you want to weigh this, as I said in my testimony the other day, if you want to weigh it more heavily one way or the other, that's fine. But to restrict it only to that is totally misrepresenting the intent of what this law should be about. Now, my question to you this morning, sir, then is, how would you answer the question about that you believe that some of these folks believe that it disincentivizes mortgage lending in favor of community development loans?
Yeah, I don't believe it disincentivizes us all. As we traveled across the United States and talked to community groups and civil rights organizations and banks, we did not want to disrupt people's business models the way they were serving their community. So, the claim that this will cause less mortgage lending, I don't think is valid. One of the things we did is we moved from units to on-balance sheet so we could have an actual numerical measure against deposits, was those financial institutions that did mortgage origination and sold it, that we gave them credit, even if they held the mortgage for 1 day, for 90 days of credit. And that's one of the open items that we're looking to get feedback from the notice of proposed rulemaking. But I do agree with you that if you really look at the actual results in the Community Reinvestment Act, the biggest component of the way institutions meet the needs of their communities is through small business lending. It isn't mortgages, it's actually small business lending. And similar to my community in Maquoketa, when we lost that big factory, families started to move out of the city and people had to drive 30 to 60 miles to get a job. It had a really negative impact on the social infrastructure of our community.
Thank you for the comment. It's interesting that the last person that asked questions here is also the chairman of the Small Business Committee, and this should be something I would think we right square in the middle of where she'd like to be right now with you, to help you, to encourage you to continue to structure this thing so there's an incentive to put money into small businesses that can build communities. 70% of the jobs in this country are provided by small businesses. That's where people want to live, where they can actually get a job. One of the things that I found is I talked to a lot of other financial services folks around my district and the country, was the fact that in the previous administration used this law to really beat banks over the head with regards to try and incentivize them and force them to do certain things that were actually against their own business model. Are you aware of that, and what have you done to stop the nonsense?
I think unfortunately CRA has been used by certain organizations when there's an event, a branch opening, a new business, an acquisition or merger. The uncertainty around the clarification about is an entity in compliance with their CRA often can be used by certain groups to extract economic dollars. I do think by bringing clarity to this that a lot of that will be eliminated. Perhaps some of the groups that are protesting the loudest are recognizing that this clarity will be healthy for both community groups, civil rights organizations, and the banks, and not so healthy for them.
I thank you for that this morning, and thank you for continuing to work hard on this. I think the clarity that you're trying to bring to this is very, very much needed to be able to understand how banks can be incentivized and be given credit for developing the communities that they want to have people live in and work in. Thank you very much. Now yield back.
The gentleman from California, Mr. Sherman, who is also the chair for the Subcommittee on Investor Protection, Entrepreneurship, and Capital Markets, is now recognized for 5 minutes.
Mr. Comptroller, in about a month or so, we'll have hearings on LIBOR. In our private conversation, you've urged us to look at something other than SOFR so that we don't get a a rate that goes down in times of fiscal crisis or downturn. I hope that you'll be able to propose a rate that is based on real verifiable transactions, not surveys. But while we'll listen to you on LIBOR, it is distressing that you will not listen to Congress when it comes just to the timing of when you're going to publish these rules. You're closing the book when we've asked it. This is something I've never seen an agency do. It shows a contempt for this committee that's almost inconsistent with me listening to you on LIBOR or us listening to you on anything else. Now, it's my understanding that you've just recently reached out to a number of banks to request data to support your approach. If the OCC and FDIC lack sufficient data to support the proposed rule, why are you hell-bent on adopting it on an expedited basis?
Yep. Would you mind if I just clarify a point on the LIBOR just real quick?
No, this is my time. Please respond to my question.
We do not set the index. That'll be set by the industry, but it has to be safe.
Again, please respond to my question.
So is your question, why did we just recently reach out to banks for the data?
Yes, and knowing, why do you want to adopt a rule on such a quick timetable when you still don't have the information?
Well, we do have the information. What we've gone out to the banks is because they house the actual information. We could get it through other sources to do a validation of the information that we pulled to make sure that it's accurate. That information.
So you don't know whether it's accurate, but you are hell-bent on ignoring the request of this committee to extend.
We wanted to do validation. So and that data request is supposed to be concluded by March 10th.
Let me continue. You're not willing to wait until you can work out something with the Fed. So you're going to end up with regulatory arbitrage. Some banks will be subject to one rule, other banks will be subject to another rule. Has the Fed encouraged you to ignore the request of this committee for additional time to try to get this rule right?
We have been on a long journey. We've communicated our effort over the last 2 years of the direction we're going. Regarding regulatory arbitrage, I don't agree with that statement. We will control 85% of the CRA activity in the industry today. There are hundreds of billions of dollars that can flow into communities by I think, completing this.
Right, and then if banks don't like your rule, they can go get themselves regulated by the Fed, or if they don't like the Fed's rule, they can rearrange their corporate structure and be regulated by you.
Highly unlikely.
Highly unlikely. We'll see. Now, have you looked at the additional data that is going to have to be requested? And the
It isn't additional data. It's the data we have. We're just asking to give us the.
No, okay. Once this rule goes into effect, if it were to go into effect in its present form, consumers would have to provide banks and banks would have to collect more information. That's a hassle for consumers, it's a privacy concern for consumers, and it's a cost for banks. Has that been analyzed in your process?
That's an inaccurate statement. There would not be a requirement for any additional data from consumers, and banks have that data in-house already. They would have to reformat.
So there's no additional data collection?
No. Additional data from the banks to the regulators, but not from consumers to the banks.
How would this rule apply to, would it reduce lenders' reliance on mortgages to meet CRA requirements?
How would the rule apply to lenders designed to reduce?
And then will the effect of this rule be that banks try to comply with CRA, not by buying mortgages, but by doing other things instead? What effect is this going to have on home lending?
I think it's going to increase lending because those banks that just traded mortgage-backed securities or mortgage pools and got 100% on the dollar credit for that will not be able to do that in the future. The little secret to CRA was Bank A bought the mortgage pool, got credit, sold it to Bank B, got 100%, sold it to Bank C, got 100%, and sold it to Bank D. So $4 of CRA credit was created.
Your time has
There was only
expired.
$1.
My time has expired. I look forward to learning more about that.
Thank you.
The gentleman from Florida, Mr. Posey, is recognized for 5 minutes.
Thank you, Madam Chair. I join everyone here in welcoming you and thank you for your service. I commend you for taking the daunting challenge of trying to modernize the evaluation of banks under the Community Reinvestment Act. I apologize for some of the uncivil behavior you've already experienced here and no doubt will continue to experience here. Unfortunately, that seems to be the new leadership standard in the House of Representatives. I noticed you were cut off before you were allowed to answer questions that they asked you, and I'd like to yield you time now if you'd like to follow up on those.
Well, thank you very much. I mean, I think it's clear that this proposal will increase the number of assessment areas where banks are measured. When you have additional measurement, that will increase additional dollars that will flow into America, assessment areas across America. At the top of the house of the banks, we toured rural areas. We went to Indian country. We've now allowed for family farms and for Indian country to be included in CRA-related activities. I'm, you know, at the OCC, we have a big initiative around minority deposit institutions. We clarified that minority deposit institutions, both loaned by other banks and equity investments, can get CRA credit, where I think under Mr. Meeks' proposal, he's doing some great things, but I think if you really look at the minority deposit institutions, they need capital flowing into those banks, and this can allow that capital to come in. And we've also offered up instances where we will give a multiplier to those entities where we see certain items that we think that need to occur. So we're highly encouraged by being able to move this forward. It's been a long-term process, years in the making, and that's why we feel it's very important for the 13 pages in the reg text that anybody can't get through in the next 40 days that we have left in the comment period. Come over to the OCC. Bao Nguyen or Gervetta behind me will sit down with them, as I will myself, and we can walk people through it. We're not asking for something unusual to get through this in the next 40 days.
Thank you, and I appreciate those comments, and I'm glad that you had time to make them. There's an old saying that says, what doesn't get measured doesn't get done. I believe that completely, and you no doubt have already found in Washington, D.C., people generally don't like accountability. The deep states run this place for a long time. They've done it however they want to do it. It doesn't make any difference who's in charge, and until now. And now there's a new sheriff in town, and you're one of the deputies, and I'm deeply grateful to you for taking on the challenge and stepping up and actually trying to modernize this and make it measured. I think it will benefit everybody.
That's right.
Banking was used as a weapon against legal solvent businesses by the last administration under the auspices of Operation Choke Point, where if the government didn't like your business, they told banks basically that they weren't allowed to do business with you or they were going to be in big trouble with the OCC. I'm sure you're familiar with that, may have even been a victim of it at some time. Do you believe this was in violation of the Community Reinvestment Act?
So we've had a lot of dialogue in regards to that based upon a lot of letters from Congress about looking at if an institution decides not to bank a particular industry. We have offered up to the banks that we do not feel you should isolate and eliminate different industries, but we also believe banks and boards have the ability to make those decisions. When you read CRA, it says that the bank should serve the entire community to which they provide banking services. And so this is an area, I would be honest with you, we're working our way through, trying to find our way of, how to either provide good guidance to banks on this issue.
But do you think it was in violation of the Community Reinvestment Act?
I don't necessarily feel if I elect not to bank a particular company that it's in violation of the Community Reinvestment Act.
Okay. Through Operation Choke Point, shouldn't be a functioning program any longer. I've had some constituent contact that suggests banks may choose to withdraw or withhold banking service, including lending, from firms or businesses that, while completely legal, may not have found favor in certain political circles. I'm told that press calls this practice de-risking. Can you explain the OCC's policy on such practices, also known as de-risking or deselecting as the case may be, and whether we have a policy in place to ensure that banking services are available to all legal businesses? on equal terms?
We encourage banks to bank legal businesses that operate within their community, but do allow the institutions to make a decision on those particular entities that they bank.
Thank you.
The gentleman from New York, Mr. Meeks, who is also the chair of the Subcommittee on Consumer Protection and Financial Institutions, is recognized for 5 minutes.
Mr. Otting, do you know or do you believe that CRA came out of a civil rights bill?
I believe CRA was intended to serve the entire community to which it is regulated.
Well,
and I also believe it was intended to eliminate redlining within communities.
Do you know that it, in fact, this is not came out of civil rights? In fact, if you look up the label, as I have right here, that it came out of civil rights, out of a civil rights bill back, and it was passed in 1977. And so the question I have, just listening to you, you talked about that you yourself have not seen or was a part of discrimination, but you've talked to some other folks. But let me just say, it says right here, CRA laws passed to reduce discrimination in the credit and housing markets, including what had passed, the Fair Housing Act of 1968, the Equal Credit Opportunity Act of 1974, the Home Mortgage Disclosure Act of 1975, and that in fact, that the home mortgage disclosure, that CRA seeks to ensure the provisions, the credit to all parts of the community, regardless of the negative wealth or poverty of the neighborhood. It was and is a civil rights bill. Now, I'm saying this to you because if you have not, affected by it at all, you've learned by some other folks, then I'm telling you, do you know what civil rights is and what it means to people of color in this country? And then the question then is, do you respect the people in the civil rights movement, the people in the civil rights organizations? Is there respect by them? Because with you, let me just, now I want to put this into the record, because what they've been asking for, and what you've heard here from a number of individuals, is asking for a longer period of time so that we can get this right, because it affects so many people. Not just push it along on a 60-day period. I want to submit to the record 3 letters. The first is a joint trades letter from the Independent Community Bankers Association, the National Bankers Association, the National Association of Affordable Housing Lenders, the Community Development Bankers Association. These groups combined represent a majority of banks of all sizes in this country. And the letter says, and I quote, "We are, however, concerned, given the complexity of the proposed rule, that the current 60-day comment period is not an adequate amount of time to work with our members to analyze, assess, and understand how the rule will affect their operations and strategies for serving their communities. And to this end, they respectfully ask for you to extend the date to allow for 120-day comment. Then all members of this committee, bipartisan, sent you a letter. And I want to submit that for the record. And then the third letter is your response, Mr. Otting. Your response, frankly, shows either a lack of disrespect for Congress or lack of disrespect for those who are in and believe in civil rights. It says, and I quote, "Because the 60-day comment period does not start until publication in the Federal Register, stakeholders will have, in effect, approximately 90 days to review and comment on the NPR." That's outrageous, and it's completely disrespectful of individuals who would be affected by this, individuals who would be regulated by this, all who say, I don't understand what the rush is.
Without objection, those letters will be accepted in the record.
Thank you, Madam Chair. What the rush is, what are you afraid of, or why don't you listen to the people who would be regulated by this and affected by this? We talk about home ownership. Given in your proposal, number one, let me just tell you something. In low and moderate incomes, particularly communities of color, the way you build wealth for those communities, the largest investments that they will make is in their mortgage. I wouldn't be here today but for the investment that my parents made in a mortgage that they then utilize so that I can get an education. And then based upon this, the OCC's proposal, only 25% of value of retail loans sold within 90 days of origination will you be qualified for CRA. which means that it would become a disincentive for individuals in these communities to lend money in these communities to people of color and low and moderate income. Exactly the opposite of why CRA was created. So it was to give more access for individuals to prevent redlining and to make sure folks can get in to banks and incentivize banks to lend to people so they can get mortgages, so they can create wealth for themselves and use that at times to create businesses and others. Your proposal and your lack of courtesy of extending to 160 days discredits that.
The gentleman from Michigan, Mr. Huizinga, is recognized for 5 minutes.
Thank you. Appreciate you coming, Mr. Otting. I'm trying to quickly look over the letter. I think my friend from New York just misspoke, not intentionally, but just misspoke that it is not a bipartisan letter. It's a bicameral letter. It's a letter that was sent.
That is correct.
I'm reviewing your response. I failed to see the disrespect that you are showing directly from this letter, but nonetheless, I do want to hear from you how you, I won't cut you off, how you are currently and how you plan to in the future receive input from both the public as well as members of Congress in this committee.
Thank you very much. So as I've indicated in my opening comment, this has been a long journey, specifically over the last 2 years. We did enormous outreach, traveling to communities across the United States, meeting with groups, sharing the framework of what we were looking to do, eliciting feedback. I would tell you between the ANPR and the NPR, a lot of that feedback actually framed up to which we came forward with the NPR.
And that was how long of a process?
We issued the ANPR in August of 2018. But we began way before the ANPR of going out to communities. Prior to that, there was a lot of dialogue going back 10 years within the agency. So I think
this isn't a surprise to anybody who's been involved.
No, and we redirected based upon a lot of that feedback about what the final product looks like. And it's also important to note that the term of 60 days gets used here. We actually produced on the internet of both the FDIC and the OCC on December 9th the document. It didn't get published through the National Register until January 9th, which was 28 days.
Yeah.
So actually there's 88 days for people to be able to respond. After that period of time, we will take 60 to 75 days to analyze the comments that we get. And there'll be a lot of outreach during that period of time as well.
Okay. With including members of this committee, which I've
Absolutely.
heard
You know, I know most of you here. I have been up to your offices numerous times over the last 2 years. I would gather to say I've been to visit each of you at least twice. I think you were assured every time I came to talk to you, I gave you an update where we were on modernizing CRA.
Okay, I appreciate that. I want to get to one thing at the very end about my district. I have a unique, I think, mix of both urban and extremely rural. And in fact, one of my counties, one of my counties, which has a sizable minority population, is the poorest county in the state of Michigan, and is something I think in the top 60 poorest counties in the nation. And very difficult to have banking there. There are branches. That is, and I commend those folks who run those for that outreach. But we know banking has changed, and the internet predominantly. And I'm curious on if you could clarify how the proposal is going to deal with that, and how you're going to be tracking banks and giving them credit for where they are receiving their deposits and where their projects are.
Sure. First of all, the branch network is still a critical component of U.S. banking, and so by simplifying the rules of how it's measured, we won't have to do a small sample of the assessment areas across America. We'll be able to look at every community, including your small communities, and see how the banks that are domiciled in those communities are supporting those communities. Today, in my example, 276 regional banks, we looked at 40 of their assessment areas. We'll look at all 276 going forward, and so your community will be able to determine what is going into that community from a CRA perspective, so there'll be more data available. Also, as you talk about the evolution of banking going through the internet, those institutions that take more than 50% of their deposits outside their assessment area will also be required to invest back into those communities because they'll be deemed CRA assessment areas.
Okay, in my last 30 seconds, do you fear that without the Fed's support, financial institutions will be unduly burdened with additional and possibly competing CRA regulations?
I'm sorry, could you repeat that?
Do you fear that without the Fed's support that there may be competing CRA regulations out there?
I don't. We have thousands of rules, regulations, and guidance that differ amongst the agencies, so no, I do not. I do not see it an impediment at all.
Okay, and in my remaining 5 seconds, I appreciate your opportunity to be here. And the continuing this conversation, I yield back.
Thank you very much.
The gentleman from Georgia, Mr. Scott, is recognized for 5 minutes.
What happened?
Thank you very much, Chair Leader. Let me say out the outset, Comptroller Otting, let me remind you that you are not a dictator of our financial system. The reason I say that is your attitude reflects that. We've had, our committee has had concerns raised to us from community activists about your rule, and you have expressed that don't matter. We have had requests for you to appear and discuss and lengthen the time frame for these concerns. You said no. You have actually misspoken when you said about the Federal Reserve. They were in here last month, and I specifically asked them, where were you? Because you were the center of attraction when we were discussing that bill. And I was very concerned that you failed to show up at that hearing with the other regulators, our financial system. Regulatory process is a collaborative effort, not just yours. We've had concerns from the very banks who are very much concerned, don't even know how to follow this regulation. So when some from the other side talk about uncivil action, there's no uncivil action on our side. If there is any, it's you who are coming in here with an attitude that it's my way or the highway. Now, I am very concerned about one of the fundamental pieces of yours that impacts the very purpose for this act. If it weren't for the civil rights movement, there would be no CRA. That is the pillar of this act. And your rule violates the efforts of banks, restricts their efforts to increase and supply adequate, affordable lending practices for the very people that the act was put in to protect. When in your act, your proposal discounts loan origination in favor of balance sheet. That right there makes it more difficult for the community banks to serve and extend that help. And so I can't understand why you are doing what you're doing when the entire community is asking why? The banks can't even figure out how to respond. People in the civil rights movement who gave their lives to have such a law placed on the books are asking why. The Federal Reserve, the FDIC, all which were here, we're all trying to figure out why. So tell us, why are you acting in such a dictatorial way?
Needless to say, I respect you very much, Congressman. I find somewhat appalling the comments that you made to me. I'm doing this in the best interests of communities across America. I do believe that this will increase.
But why haven't you responded? I mean, why, I mean,
How many
do
years
you think
do you want this to go
everybody
on?
that has
How
to
many years do you
implement
want
this?
this to go on? I mean,
No, I don't. My concern
I've been up
is,
to your office personally 3 times to watch.
I think you have. That's why I'm so disappointed in you, because I'm surprised.
Yeah, I've spent an enormous
It doesn't
amount of
seem
time.
like you.
Yeah.
The witness is requested to provide an answer in writing for the record. Your time has expired. The gentleman from Kentucky, Mr. Barr, is recognized for 5 minutes.
Thank you, Madam Chairwoman, and Comptroller Otting. Thank you for being here. I commend you for your work to modernize the Community Reinvestment Act, and I would ask my colleagues to follow the rules of decorum and not refer to you as a dictator. I think you're showing an exemplary patience here today for someone who is totally following all of the rules and procedures under the Administrative Procedures Act. There's a comment period. You're following those. There's no dictatorial behavior here. You're just actually modernizing the CRA through the rules and the rulemaking process that's set forth in federal law. And there is a comment period. Obviously, we have some of our colleagues who want to provide you some feedback on your proposal. They get that opportunity. You're following those rules. And let me just make the counterpoint that I think not only are you bringing the CRA into the 21st century and modernizing it, making it more objective and less subjective for the lenders and the banks, but I think more importantly, you're bringing the CRA into the 21st century in a way that will much better help low and moderate income communities. And in Kentucky, that I have the privilege of representing, we have a lot of CRA deserts. We have a lot of rural communities that don't get investment because the CRA is stuck in 1977. We need what you're doing because we need CRA to reflect the modern day realities of low and moderate income communities that are not served by this outdated CRA. And you're doing a great job to bring this into the 21st century. Let me ask you this. I really think that the best innovation that you've done in this proposal is to clarify what counts. And you and I have talked about this before. What I think is very, very important is in this modernization of in your proposal is that banks who have suffered under a lack of transparency over the years, and they're understandably skeptical that regulators will be able to totally remove that subjectivity and guesswork as to whether an activity is CRA qualifying. So I want to ask you about that feature of the proposal that says that banks could have projects approved for CRA credit before they're being underwritten, contrary to the current model of approving loans and receiving CRA credit after the fact. Tell me, what assurances can you give banks and lenders that this proposal will, in fact, clarify in advance what activities will receive CRA credit and allow banks to solicit agency confirmation that an activity qualifies for CRA credit prior to engaging in that activity?
Thank you, Congressman. First of all, one of the big challenges with CRA often is a bank is concerned about something qualifying, and so they had a tendency to just slide right to the middle of the bell curve and only do the most conservative things. And to be creative across America and really, I think, serve the low to moderate income community, we want people to stretch and think of new ways to help that community with housing and jobs and activities.
And how will that actually improve access to capital in low and moderate income?
It'll do two things, because everybody around America will know what counts, and a lot of times you find things being done in New York People didn't know about them in Los Angeles, and things being done in Seattle, they didn't know about them in Chicago. So now we have a list of saying, here's all the things that will qualify.
I think that's huge. I think that is absolutely immensely beneficial to low and moderate income communities. Why on earth would there be criticism of this proposal that's going to invite more capital into low income communities, because banks and lenders are actually going to know in advance that this qualifies and this gets credit? That is a great innovation, and I commend you for it, and everyone who cares about low and moderate income communities should applaud that. Let me ask you this. The Fed is not part of this. What are you doing to engage the Federal Financial Institutions Examination Council to work with not just the Fed and your agencies and the FDIC, but also the state bank regulators to make sure we have a harmonization here?
Yeah, you know, the ultimate goal was to bring this to one rule. We're still hopeful that as we progress this into a rule, that then the Fed can look at it, can observe how it's working, and then ultimately their choice could be they could adapt this or modify it. But I do think, you know, the choices would be stay on the current CRA plan, or perhaps move into our plan or modify another plan. But I do not see regulatory arbitrage. I do not see confusion amongst the banks. Generally, the banks are looking from their primary regulator what the rules and requirements are, and we think this brings tremendous.
Is there any indication to date that the comments submitted in response to your rulemaking are anything other than authentic?
There is not.
And final point, and I made this.
Can I take one question on that, Congressman?
Sure.
We don't know, because they can submit anonymous comments. We read them all and see, do they have substance? It's not a numbers game. It's really the substance and the actionable items that come in those letters.
Thank you. I yield back.
The gentleman from Missouri, Mr. Clay, who is also the chair for the Subcommittee on Housing, Community Development, and Insurance, is recognized for 5 minutes.
Thank you, Madam Chair, and thank you, Mr. Otting, for being here today. You know, the Great Recession had a disproportionate impact on communities of color. CRA and laws like it were meant to level the playing field for communities that face systemic discrimination and financial exclusion. CRA advocacy groups have argued that the OCC's 1-ratio rule would dilute CRA activity in low and moderate income communities. Are you sensitive to these criticisms and willing to listen to all community and civil rights organizations to revise your approach?
Yeah, we've had a number of discussions with communities and civil rights organizations. Not everybody takes the same positions to the one that you described. Congressman, I spent a few minutes, and I'm happy to do it again, to talk about there is no 1-ratio in this proposal. That's a myth. It's inaccurate. The average regional bank will have 502 measurement points. So every community would be measured by units and dollars, and at the top of the house it would be dollars. So that's a false statement. I'm sorry that you know, I'd be happy to come by and explain that to you if you'd like.
Okay, but look, let's cut to the chase. The overall intent of your revisions, is it your intent to uplift these communities that have been locked out of the recovery? They've been locked out of economic activity altogether. What do you think the overall intent will be of your rule changes?
Absolutely, Congressman. I have a strong belief that by clarifying what counts, clarifying where it counts, how the regulators are going to count it, will allow communities to attract dollars and capital into those communities. I wouldn't be taking this journey if it wasn't for that.
Well, here's what the National Consumer Reinvestment Coalition has estimated, that relaxing CRA, like your proposal does, could lead to a potential loss of $52 to $105 billion in lending to low and moderate income communities over a 5-year period. And what do you say?
I say that study was flawed because it made an assessment that 50% of the assessment areas would go away. So I don't think that study is accurate. I also think NCRC is a biased organization. They receive money in mergers that they extract from the banks. And so I don't think they can independently assess this rule.
Well, here's what they say, that implementing your proposal, CRA rulemaking, shows a lack of concern for the potential loss of lending to low and moderate income and racial and ethnic minority communities. What do you say to that?
I say we're closing the loopholes where high income people move into low to moderate income areas and get credit for those as mortgages today.
Okay.
And we're going back to the individual assessment areas, and so every individual assessment area will have a measurement.
You know, how is that accurate when we look at the constant, steady decline of overall family wealth in communities of color, especially in the African American community? Family wealth is 1/10 of white wealth in this country. How do we level that playing field through your changes?
I think it's disturbing that the trend line on African American home ownership in this country, we have met, Gravetta and I, with the Black Realtors Association. There's work to be done there. We have to understand, why is that occurring?
Well, here's why it's occurring: because you never get a fair appraisal value, you never get extended credit for businesses or home mortgages. So they have to go into the predatory market. How do we stop that? And how does your rule address that?
Well, I'm not sure that's covered under CRA exactly. I think that is...
It has a lot to do with CRA by what
not the items
activities
you were
banks
describing.
do.
Not the items you were describing, but you obviously have a passion for this. We have spent a fair amount of time on this as well. I'd be happy to come over and spend some time with you. This is an issue we've got to get it fixed in America.
We've never discussed this. You've never been up to my office, have you?
Not to the best of my knowledge.
I didn't think so. And but thank you for your question, your answers. I yield back.
Gentleman from Colorado, Mr. Tipton is recognized for 5 minutes.
Thank you, Madam Chair. Comptroller Otting, appreciate you taking the time on your left. And I'm a little dismayed with some of the comments that have been made here today, using the word dictator directed towards you, saying that you want to be able to restrict banks' ability to be able to make loans for the people that they are designed to serve. We'd had a letter that was passed out that was sent to you by some of our colleagues on the Democrat side. Would like, Madam Chair, to be able to introduce into the record with unanimous
Without
consent.
objection, such is the order.
This letter does recognize what I hear you talking about, wanting to be able to move the CRA into the modern age, to be able to update something that is outdated, and to make sure that we are actually addressing some of the concerns in communities. And one thing that I'd like to be able to highlight when we're talking about making out that menu of acceptable CRA activities for banks, you'd included something that came out of some of our hearings, expanding broadband. In your opening statement, you talked about living in a rural area. That's my district. We talk an awful lot in this committee about the urban areas, and we should, in terms of creating some economic opportunity. But on a per capita basis, the impact that we feel in those rural communities when we see shrinking numbers of community banks being able to provide services into those areas, it's important that we remember those people, those families are important too. And I think a lot of what you're trying to be able to focus on, what we address in this letter, is to be able to make sure that we're actually achieving some of those goals in those local communities. But I wanted you to be able to maybe expand a little bit on some of the certainty that you can certainly create for the banks in terms of what they are going to be investing in, but also to speak about probably what's ultimately most important, what I hope we all agree on, helping the lives of the people that live in those communities through those investments. You've been cut off a few times. Would you like to be able to speak to that?
No, I think, the certainty around the list of what qualifies, it's amazing. We have an act that's been in place since 1977, and you could travel around and ask people, and no one could give you what actually qualifies for CRA. This was a joint effort between the FDIC, the feds, and ourselves to come to that list. It'll be a living, breathing document, meaning that we will add to that list, perhaps subtract to that list if it's not meeting the needs of low to moderate income communities, but also the intake valves, so to speak, when there's a project that doesn't fit on that list, to get a pre-ruling about, is this something that will benefit low to moderate income communities across America? I know your rural district. I've been over to see you many times. If you've seen banks shrink and consolidate, the assessment areas in rural America have gone away. This forces those banks to go back out into those communities where they have branches and support those local communities. But just as important, on the top of the house, when a bank meets their assessment area requirements, they will then have fungible dollars that they can go to rural America and make those investments in things like you described that can help those people continue on with the American dream. So I do think this is a really fundamental shift in the right direction for all of America.
And I appreciate that comment because this is a complex issue in terms of trying to be able to define the areas, what is going to actually be acceptable under the CRA. I can speak to a lot of the banks that I've talked to. Investments that they'd like to be able to make, investments that they have made that were not actually credited towards CRA, but they had a real commitment to be able to grow those communities and to be able to make sure. We've had a fair amount of conversation in terms of some of the comment period. It was on, I noted in your response letter to subcommittee chairman that you said you will continue to monitor the number of comments to determine if an extension is necessary later in the comment period. So would you like to speak to what you're doing to be able to listen, what you're getting back in some of those comments?
Absolutely. So we have 40 days left in the comment period. There's 13 pages in the red text that someone has to read through and understand. And we look for those comments to come in to add value. It's not a numbers game, meaning, form letters, things like that. If they don't add substance to the comments with actionable items, we so note those, and we so note what was covered. But we've already begun the process. I said I read the 1,500 letters. Last week, there were 83 letters that had already been delivered. This morning, I found out there's 152 letters. We're documenting, matrixing, identifying what are coming in those comment letters. So we can learn from those comment letters of things that we can make this rule, I think, the best that it can be. I agree with you. This is a complex, emotional issue that requires
The gentleman's
a lot
time
of thought.
has expired. The witness is requested to provide an answer in writing for the record. The gentleman from Illinois, Mr. Foster, is recognized for 5 minutes.
Hi, over here. Comptroller Otting. I understand that you wanted to bring clarity and simplification to CRA evaluations, and I appreciate that. But, I'm a physicist, and, there's a famous quote from Albert Einstein that says that things should be as simple as possible, but not simpler. Okay? And I think there's a danger here. One of the simple principles that you might consider adding to these is to reward the number of people helped and not simply the dollar volume delivered. Because, also the number of small businesses helped. That should be an important part of any numerical metric you come up with. So, for example, if you go out into some rural area and you build a giant automated factory with no jobs, you haven't really helped any people, and that should not count as money delivered to those communities. But if you count the number of people helped, you come to something that more aligns with, I think, our intent on both sides of the aisle here. And so I'd like to just go through some specific things that occurred to me just reading through and listening to this discussion. So why couldn't we, for example, have retained a separate metric for lending and a separate metric for community development investments and services?
Are you asking that's what's...
Instead of just having like one big number for the dollar volume, just to separately count lending into a community and...
We looked at that, we talked about it, and in the end concluded that we would go to one numerator, which gave banks the flexibility to apply their CRA activities to their particular business model.
Right, but then the difficulty is that they will say, okay, I'm going to get all of the numerator out of an investment in a big automated factory or something like that.
So on your point, I didn't respond to that, but the examiner judgment, the examiners actually used their judgment, did that particular activity have an impact? And so we do that today. It's not quantified, but the examiner's observation of impact to the community are an important ingredient of the overall review. Today, We use 80% subjective, 20% objective. We're flipping that around, but still retaining that overview by the examiner.
At the 20% level. I mean, the difficulty is that the subjective thing must vary all over the map and inspector to inspector. But now, another thing, would it make sense to put some sort of concentration cap on transactions or activities as well?
Concentration as in like only so much in residential mortgage, so much in small business?
For example, yeah.
Again,
specific large projects.
There are different business models amongst banks, and today some banks achieve all their objectives by small business lending, some do it all by mortgages, and we generally do not dictate what the business model could look like. However, on the community development, we said in the markets, it has to be at least 2% of your dollar total has to be community development activities.
Okay, which is a pretty small fraction compared to the historical.
It
if you look what a small
depends upon the
community
size
bank,
of the investment in that market.
yeah, but if you look at the small community banks in rural areas and so on, they historically did a lot more than 2%, and you're replacing it with something less than that.
And we're open in the comments for feedback on that. We obviously got that number by having a lot of discussions with people, and so if people came back and thought it should be more, we would consider that.
I think there's also a danger that the proposed rule expands eligible and qualifying CRA activities to include some of what banks already do in the ordinary course of business. That dilutes the effectiveness of the CRA to the extent that you do that. For example, community development activities of loans, investments, and services would no longer have to have a primary purpose, quote-unquote primary purpose of community development targeted at LMI individuals or areas. And so, there's a danger there that if it's only, pro rata credit would be given for these instances, but broadening these activities has the danger of perverting banks' incentives in ways that really will end up being contrary. So I'd be very careful of that change.
On your point, I think what you were making was if in a hospital was done in a community and it serviced 10% low to moderate income, then that project would only get 10% credit towards their CRA. Is that what you were referencing?
That is, an example. Right?
In the 200 list, which referenced giving more credit, that list was a accumulation through the Fed, the FDIC, and OCC of what institutions are currently getting credit for, and then we synthesized that. Did it make sense?
Yeah, and again, I think putting into those metrics the number of people helped. In the instance of a hospital, even if it mainly served higher income areas, provides lots of jobs for people at all levels of income, and that there should be credit for the people helped as well. So, thank you. Yield back.
Thank you.
The gentleman's time has expired. The witness was requested to provide an answer in writing for the record. The gentleman from Texas, Mr. Williams, is recognized for 5 minutes.
Thank you, Madam Chair, and thank you, Comptroller, for coming to answer our questions today. I've got several for you, and I know I've asked you this question before, but I wanted to make sure nothing has changed since we're into 2020. Are you still a capitalist, or do you think socialism would be a more favorable economic system for our country?
Congressman, when my great-grandparents came here from Ireland and Germany, they arrived in Stellis Island. They were directed to Chicago, and they were farmers. And I'm here today because of the entrepreneurial spirit and the capitalism they deployed. My in-laws who came from Mexico and came to Los Angeles, their family was taken care of because of capitalism. I don't know what to the strongest point of capitalism is, but I affirm my support of capitalism.
All right. Well, thank you for that. I appreciate it. I think there's a lot of good in the new proposal that you've talked about to modernize CRA regulations, and there are a few issues that I want to touch on specifically. The current CRA regime contains loopholes that allow a bank's balance sheet to appear as if they are engaged in CRA-eligible activity, even though they never actually made the investments in their communities. So can you tell us how this new proposal tightens up the CRA requirements to ensure that each institution is actually making impactful investments in the economic and their community that they serve?
Yeah, specifically on the mortgage side, is that Today, a financial institution could go to Southwest Washington, which is dealt in a low to moderate income area, and I could move into that neighborhood and a bank could get credit for that mortgage. In the future, both the area and the borrower will be required to be a low to moderate income individual. And so we're able to tighten that down, so to speak, in that regards. So that's probably the most profound, change that we have in the new regulations.
Okay. So before I get into more CRA questions, I wanted to raise an issue with you that has been brought to my attention. Many financial institutions are being pressured to stop doing business with industries that have fallen out of favor with some of my colleagues on the other side of the aisle. From the gun industry to private prisons to fossil fuels, banks are under increased pressure to stop working with these completely legal industries. And Mr. Posey touched on this before, and as someone who was personally targeted by Operation Choke Point, I want to just reiterate that all legal industries should have equal access to the financial system. So what would you tell financial institutions feeling the pressure, as well as the private entities, some of which you have received federal contracts?
Yes, we believe the banking industry should serve all legal businesses in America. However, we do leave that up to the boards and management of those financial institutions to make those decisions.
Federal Reserve Governor Brainerd has raised the point that using nationwide ratios for CRA may not be compatible for the needs of various communities across the country. In my district alone, we have many rural communities, such as Cleburne, Texas, that will undoubtedly have different needs than those of urban issues in urban areas in my district, like Austin. Well, I don't think she is necessarily wrong in her assessment. It appears as if the new proposal takes this into account, since there is an asset threshold where each institution will be able to decide whether to abide by the new or old CRA regime. So can you please respond to the point that Governor Brainerd raises, and then elaborate on how the new proposal would add additional flexibility for institutions serving all areas of the country?
Yeah, we believe this proposal offers the flexibility to make a determination upon the size of the market and the activities in the market. What I mean by that is if your particular city is an assessment area, we would look at the low to moderate income activity in that market in relationship to all the banks, and we'd look at the population of low to moderate income, and then we would compare that to the bank. So we're right-sizing it, so to speak, for that market. On the dollar size, what we're looking at is deposits being the numerator and how much of their total CRA activity in relationship to their deposits they're doing at their community. So if you have a big community with lots of activity, you better be doing your share, and you better be doing a percentage of your deposits. If you're a smaller community, obviously, then what would be required of you would be significantly less.
Well, thank you. In closing, I just want to thank you for your leadership and appreciate your vision. I yield my time back.
Thank you very much. The gentleman from Florida, Mr. Lawson, is recognized for 5 minutes.
Thank you, Madam Chairwoman, and welcome to the committee. One thing I would just like to state up front is that I don't think you or your staff has, to my knowledge, has been by the office to talk to me about this.
Yeah, we did come by for the Black Caucus Day, and we sat in the conference room and we had a discussion on CRA.
Could you explain to that, the Black Caucus Day, because I'm not aware?
No, this was just me coming up to meet with the Black Caucus.
Oh, but you hadn't come to meet with me. I don't want you to think
it was a meeting of 1-on-2, so
I don't want you to think that because if you met with the Black Caucus that you
No, I met with you and one other member of it. If you recall, I came up to talk about CRA that day, and 2 members showed up, and you were one of the members that we had dialogue with.
Okay, well, I have no knowledge. I apologize if that happened.
We can follow up and give you the date.
That would be great. On December 11th, you received a letter from the chairperson which stated that CRA is a critical tool to combat redlining and practices that still exist by which banks discriminate against prospective customers based primarily on where they live or the racial, I can't get my tongue here, background, rather than credit worthiness. And early on, when you were giving your testimony, you talked about your upbringing and what really happened, and one of the reasons why you wanted to make these particular changes. Could you explain a little bit further what you were trying to illustrate to the committee and how your background led you to formulating these policies that would be critically important to communities of color and disadvantaged in terms of CRA and how they work. And the reason I add that is I represent an area that stretches probably 240 miles with a lot of rural communities in between where this become very critical. So I would just like to hear your perspective on how, in coming to this conclusion and maybe not extending the number of days to 120 but to 60 days, based on your background, how did all of this come about?
First of all, it isn't 60 days, it's 88 days.
88 days.
But what I was making by that point is I came from a very poor area. My wife grew up in East Los Angeles, which is a very poor area. They were first generation to the U.S. And as I was a banker, I was able to go out into communities and deploy capital and lending into those communities and see what could be done by creating jobs in new low to moderate income housing and how it brought the vibrancy of the community back with financial counseling. So I was just making the impression that I, as Joseph Otting, have been in those communities across America and understand the need to get more lending and more capital into those communities.
Okay. Based on your experience and experiences that you all have been going on in developing the new guidelines, do you feel that the guidelines that are coming up now, that many of these banks and stuff would do more to invest and eliminate some of the discrimination that exists for many, many years? Like you said earlier, there still will be problems, but how is it that your agency will be able to do a better job than what has been extended in the past to combat a lot of this discrimination or redlining?
Yeah, first of all, we do observe redlining and discrimination. I find it appalling in America today that we still have instances of that. And we have a whole set of rules on equal credit and fair housing that we do an annual review of financial institutions, so that's how the agency does that. In relationship to the how does CRA play a bigger role, I think was the other question that you had for me, is by measuring exactly what we have the banks do and what we say it qualifies, we can look and determine what is being done across communities today. There's no data today. That's one of the big problems about CRA. If you want the information, you got to go bank by bank by bank through their performance evaluation. Our goal as a team to be able to produce that data that a year from now when I'm sitting here, you can look at a market and you can tell me why in Florida is it only this amount of money that's being invested in CRA, and you can't do that today.
Okay, and real quick, does this apply to the credit unions also?
It does not. It would require legislative action for the credit unions to be included.
Okay, with that, I yield back.
Thank you. The gentleman from Arkansas, Mr. Hill, is recognized for 5 minutes.
Thank you, Madam Chair. Thank you, Comptroller Otting, for being here today. And certainly I approach this like my friend, Mr. Luetkemeyer from Missouri, having spent 40 years complying with CRA in various capacities in the late 70s and early 80s, and in Texas for a large multi-bank holding company doing in their planning department, and in the 90s, compliance of a $3 billion bank reported to me as we rolled out and implemented the Bill Clinton changes to CRA in 1994-95, and then for 15 years as a small intermediate bank CEO. So I do look at your proposal with sort of a practical sense of, where is it better? So I want to first of all say that a review after 2 decades is important to reflect the changing landscape of the industry, and I thank you for stepping up as one of your early initiatives and say, based on my experience, you having been a bank CEO in greater Los Angeles, for example, that you see that this needs to be changed. I've talked to you that small intermediate banks bear a disproportionate amount of burden in trying to comply with CRA, and yet some of them are doing the best job of serving their communities. So as you look at the comments, I hope you'll keep that in mind, that that balance is important. Looking at the specific proposal, You answered Mr. Sherman's question and also referenced a little bit to Mr. Williams about double counting CRA credit in the mortgage-backed securities arena, in the housing arena. And I understand that, and I certainly watched with the advent of big data, banks originating a loan, selling it to a mortgage-backed security, and as you said, $4 of CRA credit spread around. But a lot of banks have built their models, though, on originating credit, selling into the mortgage-backed securities market, and then doing it again. So that's expanded credit in the U.S. I'm concerned that they don't get full CRA credit to some degree for someone who's not abusing that practice. Have you thought about providing a multiplier for banks in that credit risk, or what are some of the things you're seeing to give nuance to just saying, well, it's just 25%? That's not a very sophisticated proposal in a really sophisticated market. Maybe people could get, if they held it over a period of time, over the duration of the loan, they got more credit. What are your thoughts there?
So first of all, thanks for the question. Of the top 10 items that we will go through between the NPR and the final rule, that is one that is getting a lot of discussion. People intellectually understand where we're trying to go.
Mm-hmm.
The industry gave us that feedback initially about 25%, but over the last 2 weeks, we've done a lot of discussions with people, and now we're starting to hear a little bit more concern, should that be a higher number? And so that'll be one of the key things that we'll kind of think through as we go to the final rule here over the next 60 to 90 days.
I think that's important. I look forward to looking at the comments and discussing it more. During those 15 years that I was a bank CEO, we had two major rural counties, one with 20,000 people in it, one with 10. The one with 10 was 50% African American and very high poverty rate, almost over 30% poverty rate. So I share my colleagues' concerns about serving rural communities, and one of the rule proposals said that you're increasing small business loan amounts from $1 million to $2 million and small farms from $500,000 to $2 million. And that is a real concern in Arkansas because that will mean a lot of smaller banks can't as easily meet their CRA threshold. Again, getting back to my point about truly small intermediate bank sizes versus growing big regional banks. What are your thoughts there?
Well, I'd like to follow up and have some dialogue on that because we actually thought the feedback we got from a lot of the small banks is it doesn't take much to get to $1 million crop loan in the environment today because of the costs have risen so high that increasing that would give them ability to take care of their customers under CRA. By no means did I think it would be a hindrance.
Yeah.
And so love to follow up and hear your
We can follow up on that. And the other thing I've gotten a lot of feedback from is your approach to counting volunteer hours and how that's proposed. So maybe we can follow up a conversation on that too.
Happy to.
Thank you, Madam Chair. I yield back.
Thank you. The gentlewoman from Michigan, Ms. Tlaib, is recognized for 5 minutes.
Thank you so much, Chairwoman. I sincerely appreciate your leadership on trying to uplift some of the struggling issues regarding Community Reinvestment Act. And I thank you so much for coming before our committee again, Comptroller. In Michigan's 13th congressional district, I represent the third poorest congressional district in the country. I consistently try to bring them into the room as I talk about these issues so that we're connected to what the impact truly is on the ground when we make changes here in Washington, D.C. Most of my residents are left at the mercy of corporate investors who are using both existing and new business models to extract as much wealth as possible, exacerbating challenges that are already very much painful for distressed communities. Despite this, every year, our federal government gives away billions of dollars in tax revenue incentives yearly that have proven consistently to fail to help our most vulnerable communities, our low-income communities. We are actually closing schools, taking away parks, and instead investing in stadiums and bougie luxury hotels. That is exactly what's happening. The system is now being increasingly rigged, and CRA now is at the table in regards to being now so-called used in, I think, very much mislabeled as a way to try to increase affordable housing for our residents. So, Mr. Otting, your proposal suggests that opportunity zone areas would qualify for CRA credit, but it is unclear whether these OZ activities would have to meet CRA low-income income definitions. Right now, there are about 1,700 designated OZ census tracts that do not qualify. It's currently being under investigation right now because some of these census tracts did not qualify under the set standards that they be poor challenged communities. And for the record, Chairwoman, I would like to submit for the record a New York Times article saying Trump tax break that benefited the rich is being investigated, as well as a recent article saying the Treasury watchdog to investigate Trump Opportunity Zone program into the record.
Without objection, such is the order.
So yes or no, under your proposal, can banks receive a CRA credit for activities that do not meet the definition under CRA currently for low and moderate income?
They cannot.
So right now, they can't get credit for building a soccer stadium, a for-profit soccer stadium. They cannot get CRA credit in an opportunity zone.
If it's not in a low to moderate income community, they cannot get credit.
But right now, opportunity zones have been designated in areas.
Clarification is it can be an opportunity zone as long as it's a low to moderate income neighborhood. If it's that percentage of opportunity zones that are not low to moderate income, it would not qualify for CRA.
Okay, so if it's in a low moderate income community, great, check. So a for-profit hockey stadium gets built. They get credit for that?
So
in a low moderate income community,
yeah,
they will get credit for building a for-profit.
Yeah, appreciate if you don't mind me answering. So,
no, go ahead.
So since
yes or no, though?
Yeah, since 1993. Since 1993.
Chairwoman, it just needs to be very clear.
They've given credit for sports facilities. The beauty of putting this list out and giving people the ability to offer comments, if you don't like that, you can write.
Please accept this as me submitting comments to saying I have an issue with this.
Written
How about I will do it for you, no problem. I will write it out for you. I'll give you a number of various projects in Detroit and throughout Wayne County where for-profit prisons should not qualify to get CRA credit. For-profit hockey stadium where literally a mile down the street, Cass Tech High School doesn't have clean drinking water. Do you see what I'm saying here? So CRA, the true intent of CRA was not to help the wealthy and those that already do not need help. And you know this, I mean, Comptroller Otting, know that the frontline communities, that's why we're here. Government has to be about people. And right now, they are rigging the system, and CRA, you're allowing them to codify into the CRA that, yes, for-profit prisons and stadiums can actually get CRA credit in low, moderate income communities. That's wrong.
Well, then that's why we should change it in the comment period.
Yeah, well, that's why I'm telling you right now, if you want me to put it in writing, but I'm telling you on behalf of 13 Districts Strong, I am giving you notice. We have a serious problem with you giving credit for these kinds of activities. They have nothing to do with access to affordable housing.
You say me, it's been in place since 1993.
I understand, but you just codified. No, you're codifying it.
I'm the first person who's putting a list together.
Yes or no, you're codifying it now.
That you've even become aware of it because I put the list out.
Oh, no, I wasn't here, sir. I've only been here a year. I would definitely, even as a state representative, I would have submitted comments and put you on notice, but I'm telling you, you're codifying it into law.
The only reason you even know about the stadium is because I put the list out for public comment.
Yeah, you can say that, but it doesn't make it right or wrong, right?
I'm not arguing whether it's right or wrong.
Look, I'm going to submit questions, Chairwoman, to him directly, and I would like it to, for you to answer them in writing.
And I came by your office before. I'd be happy to do that again.
Yeah, coming by my office does not actually make it right. It's still wrong to give credit for-profit prisons and stadiums for CRA.
The witness is requested to provide an answer in writing for the record.
That we've given CRA credit for.
The gentleman's time has expired.
Thank you.
The witness is required to reply and answer to the member as soon as possible. Thank you. The gentleman from Tennessee, Mr. Kustoff, is recognized for 5 minutes.
Thank you, Madam Chair, and thank you, Comptroller Otting, for appearing today. At the end of your time, I know you were trying to finish an answer. Would you like some additional time to try to finish?
I was just going to comment that I'm not aware of a private prison receiving CRA credit.
In relation to that last set of questions, was it the Clinton administration that put the proposal into action?
The last time it was modified was 1995, but the activities that we put out on the list began in 1993.
Thank you. If I could, Comptroller Otting, I know that a couple of my colleagues have asked you about this, but I read an article that was authored or co-authored by former Senator Phil Gramm in the Wall Street Journal a couple of weeks ago, and it discussed, if you will, the cross-section between CRA credit and attempts by some to target legal businesses and, in some case, companies with federal government contracts, politicizing, if you will, some of the banking services. And so I think we're all aware of what happened during Operation Choke Point by the previous administration to deny credit to credit-worthy customers, if you will, through political intimidation. If you could, though, Comptroller, could you address whether the OCC has done any analysis of industries that are being denied banking or credit services, even though they may be financially sound and otherwise credit-worthy?
We have not done a study. Our position is that legal businesses should have access to the U.S. banking system, and we leave those decisions up to the management of the boards of the respective banks. However, under CRA, an institution is required to serve the entire community if they're domiciled in that banking community.
Following up on that, what guidance would you give those companies in industries from the OCC in order that they can obtain that financing and stay legal?
We give guidance that legal businesses should have access to the U.S. banking system.
Also, as it relates to farm lending in rural communities, and you've had a number of questions as it relates to those communities, and you talked about your parents. In my district, which is the 8th Congressional District of Tennessee, I represent a number of small farmers. And in fact, my state, Tennessee, has the largest Farm Bureau membership in the country. So could you talk about your proposal or the proposal of the OCC and how it could better serve the rural communities through increased farm lending?
There's a couple key things as we worked our way through in speaking to family farm owners. One was the dollar amount. It used to be $500,000 or less in family farms were included for CRA. We're moving that to $2 million. That did a lot of restrictions from banks getting credit for CRA. In addition to that, we've also now allowed larger organizations that maybe are not with a branch in a respective rural community to be able to do qualified CRA investments and lending into those communities, and we think that will drive more capital and investments in rural America.
Thank you. And I do think that when we overlook rural America and when we talk about the LMI communities, but obviously some of these rural communities are struggling. We know that job opportunities are few and far between. Given, and you've talked about this, that physical bank branches are disappearing. We've seen that over a number of years for a number of reasons, including technology, as well as the proposal focus on bank deposits from outside of the physical locations. How do you envision that component directly impacting rural America?
I think we've seen this migration through the internet into certain geographic areas where those deposits are managed by a headquarters operation. What we're trying to do with this rule is those entities that have more than 50% of their deposits that are coming outside their assessment areas, assessing where they have 5% or more, and then requiring those banks to invest in those communities across America. So this movement from branches to internet and then outside the community, we're trying to create a mechanism that they invest back into the communities of America. And this will be a first step. We'll get lots of comments about whether it should be 5% or a lower number as we kind of work our way through the rule.
Thank you. My time has expired.
The gentlewoman from Massachusetts, Ms. Presley, is recognized for 5 minutes.
Thank you, Madam Chair, for your continued oversight, especially on an issue as consequential as the Community Reinvestment Act. A lot has been said about this proposal, that it's rushed, it's not community informed, it disregards the will of this Congress. However, I believe the words and actions that matter most in this process are yours, Comptroller Otting. Last week, the American Banker reported you as saying, quote, "I have no problem with people challenging this. This is a complicated, emotional issue." end quote. Yes or no, do you believe opposition to this proposal is couched in emotion or misunderstandings? It's too
I
complex.
don't think it's an either-or question. I think it's understanding it so you can fully understand what we're trying to do without getting false information from various people that you can reach your own conclusion.
So again, do you believe opposition to this proposal is because people, I'm just elevating what you said in American Banker, is because people are emotional or it is too complex for them to understand?
I can answer the question the same way if you'd like,
Sure.
but I wouldn't want to use your full 2 minutes.
Okay, very good. So we recently held a hearing where a panel of CRA experts testified about your proposal. And I asked that expert panel, by show of hands, how many supported your approach. Of the 5-person panel, would you venture to guess how many raised their hand in support of your proposal? This panel of
I
experts?
saw it, but I mean, it's a stacked deck,
Well,
so
reclaiming my
you
time.
can use statistics
Reclaiming my
like that, but
time.
4 of them were Democratic
Reclaiming my time,
witnesses, so.
only one
It's
witness.
because 4 of the 5 were Democratic represented.
How many raised their hands in support of the approach outlined by Governor Brainerd? All 5. I find it hard to believe that 4 out of 5 issue experts are opposed because this is a complicated, emotional issue. The idea of a single metric, which Governor Brainerd warned would encourage more capital-heavy investments instead of smaller. If, hypothetically speaking, you ran a bank that loaned to people of color, would you choose originating 300 small business loans over making one $300 million investment if the credit is all the same? Yes or no?
I think you're confused on the issue. We do not have a single metric down to the individual.
I'm not
assessor.
confused, and I'm not the only one that believes you have a single metric. So moving on.
There is.
Mr. Otting?
Here's the document. Show me on what.
Mr. Otting?
Show me on
Mr.
what
Otting,
page there's a
reclaiming my
single
time.
metric.
Reclaiming my time. Do you believe in a duty to serve? Yes or no?
Do I what?
Do you believe in a duty to serve?
I
Are you
do.
familiar with that? Okay. So in 2014 and 15, under your leadership, how many mortgage loans did One West make to black borrowers in assessment areas, given your commitment to
There
duty
was a
serve?
very small quadrant of small loans that was made, that assessment was made on. But I would suggest, I'm the Comptroller of the U.S. currency. If you have issues regarding One West Bank, you should contact
I
me.
certainly have issues because there were only, the answer is 2.
Yeah, but out of
So
how
that,
many?
that reclaiming my
56.
time,
Out
that
of
isn't much,
56.
reclaiming my time, that isn't much
Let's
of a.
just be realistic about the quadrant. It was a very small quadrant.
Reclaiming my
because
time,
we were
Comptroller
focused
Otting.
on mortgage.
I have a number
ori-
of things that I'm looking to get on the record from you, so. But the point is, that isn't much of a commitment to serving anyone, let alone the communities the CRA was intended to serve. While you were CEO, One West was one of very few banks to receive a low satisfactory score on their service test. So, yes or no, would you trust someone who repeatedly failed a key component of a driving exam with rewriting the rules of the road?
Those were 3 failed institutions that we brought together. We
Yes
did not have
or
a long
no?
history. There is no yes or no to this answer.
Well,
3
we
failed
disagree on that and
institutions
many
we
other
brought
things,
together,
Comptroller, respectfully.
that we did the best, and I think if you go speak to people in the Los Angeles community, One West Bank has done a remarkable job in their community reinvestment.
Again, we could debate that. It seems your takeaway from your experiences with the CRA is not that your bank, or any bank for that matter, need to do better, but that you should get more credit for businesses you were going to do anyway. Either you want to hear what people have to say, or you don't, Comptroller Otting. Your responses to community groups and this Congress alike suggest you don't. Thank you, and I yield.
Will the gentlelady yield me the balance of her time?
Chair?
Mr. Otting, I'm going to ask you to think about the stadiums that are being built in the Inglewood area of Los Angeles. I know you know the area. You have the Chargers, you have the Rams, and you have the Clippers. And of course, gentrification is taking place. They are now, under your proposal, eligible for loans in a way that they have not been in the past. People are being moved out. They can't, the rents are going up, the cost of housing has exploded. They are being basically forced out of the community. But the stadiums now can get credit, CR credit. So you don't have to answer now. I'm going to move on, and hopefully someone will yield me time for another question. With that, the gentleman from Ohio, Mr. Gonzalez, where is he? Is recognized for 5 minutes.
Thank you, Madam Chairwoman, for holding this hearing, and thank you, Mr. Otting, for your service to the country and for your participation today. I want to start with one point, which was, I think is somewhat comical, that the witnesses are always experts. I'd like to remind the committee that we had a comedian, I guess, in here, I forget when, who completely embarrassed himself and was a ginormous waste of time to have his presence here. And so this notion that every single person we bring forward is somehow an expert, I think is something that we should reconsider. So with that, on the stadiums piece, I just want to confirm something. We're in the comment period today, correct?
That's correct.
Okay. So this isn't currently law?
No, it's been in the law since 1993.
Okay.
And we go back, that's as far as we could research where a bank was given credit. So it's currently in the law. It's up for discussion only because we brought it out that it was available.
Yeah.
No one had ever raised the issue in the past.
And I want to commend you for that, because over the last few weeks, I've spent quite a bit of time talking with banks throughout my state. And I will tell you, in my conversations, I haven't heard objections. I've heard hesitation on certain items, and I'll press on that in a second. But I haven't heard anybody say this is a bad idea, this is going to harm the community. One of my banks in particular has an outstanding rating, one of the highest ratings, and they've done a great job. And the CRA has, for all of Ohio, really, I think, been a huge benefit. And people are excited about the change. They're excited about the objectivity in particular, because I think in some respects it's been a black box, and sort of the subjectivity of each regulator has made this harder to do. And so I commend you for putting the proposal forward. Encourage you to continue taking feedback, obviously, and implement as necessary. And on kind of one of the points I heard yesterday when I was talking with the bank, they said, we like the proposal, we're a little concerned with the timeline. It's a big shift, it's a fundamental shift with respect to how you track and calculate your CRA activities. And so I guess my question would be, how do you think about the timeline component, and how much willingness is there to work with the banks to help them make this adjustment?
Yeah, we've communicated that we think the timeline transition is 1 to 3 years.
Okay.
For two reasons. One is the technology reporting for the denominator on deposits. Most banks report deposits by branch code versus geocode. And so we're going to have, some can do it, some can't, but we think we need to work on getting it to geocode.
Mm-hmm.
And then we've also committed that any bank in their 3-year assessment period, we wouldn't start until the new timeline. So we're offering up, as a minimum, a 1 year and potentially a 3-year transition. All the financial institutions that I've spoken to in the last couple of weeks, when we've clarified that for them, I think has caused them great comfort that they can make that timeline.
Okay, thank you. And then I want to move on to discuss how you view the future of banking as it relates to emerging technologies. So leave the CRA alone for a second. I believe the OCC was the first prudential regulator to launch an innovation program. Today, all the federal financial agencies have initiatives of some form, but they're all separate. As you know, the U.S. is a much more complex multi-agency regulatory structure than other countries, a fact that many cite as creating a risk to U.S. leadership in financial innovation globally. Beyond informal discussion, do the agencies need to form an ongoing channel for coordinating on innovation, identifying areas where they should work together, and sharing learnings with each other? Is there an argument against doing so?
I don't know if there's an argument against that. I think the agencies do a pretty effective job. No, if you think about it, really the FDIC and the CFPB just stood those up recently.
Yeah.
And I think there's a lot of coordination. It's probably the bigger issues are clarifying and getting legal guidance as to how those entities will be formed, whether they'll be LICs or special charters, is probably the next big thing that has to be resolved.
Okay, and then more broadly, what is the potential for supervisory technology and reg tech to reduce compliance costs to banks and therefore their customers? And could it help community banks meet the competitive challenges they face in your estimation?
That's a complicated thing. The reg tech's, part about, how we take that forward into the future. We spend a lot of time specifically in the AML-BSA activities, trying to say, okay, now we have the standard up high enough, we're comfortable they're complying with the law. What technology can they use to make those costs more effective?
Yeah, and I'm running out of time. I'd love to follow up on that specifically. AML-BSA, I think we have an opportunity from a tech standpoint to really improve what we're doing there. With that, I yield back.
The gentleman from Virginia, Mrs. Wexton, is recognized for 5 minutes.
Thank you, Madam Chair, and thank you, Comptroller Otting, for joining us here today. The CRA examinations evaluate banks' service to LMI communities in 3 general areas: lending, investment, and service. And one way for banks to fulfill the service criteria is through nonprofit community programs like financial literacy or volunteering at a food bank. Is that correct?
That is correct.
Okay. Now, during August recess, I visited a community farm in my district where there just happened to be a busload of employees from a local bank who had just been there, and they had been, weeding and harvesting and planting and everything like that. So that is a local community farm that grows fresh produce for food banks in the area. So a great community service. But I'm concerned that the proposed plan gives undue weight to quantitative measures at the expense of qualitative measures. And the volunteer hours can really illustrate that in my mind. The plan calls for quantifying an hour of volunteer service using BLS payroll numbers to equate volunteer hours to investments. So I did the math, and it looks like for a $2 million community development loan, one loan for one project, not even a particularly large project, that would equate to 55,555 hours of volunteer service based on the $36 an hour rate that was proposed in the NPR. Can you explain how a single loan like that would compare to tens of thousands of hours of volunteer work in LMI communities? What's the rationale for that?
It's an abstract question. I'd have to understand what the community development loan was used for versus what the volunteer hours were used for.
But having a one-to-one ratio like that, you can understand how that could skew in favor of some of these for-profit development projects that don't really necessarily.
As we indicated, we have metrics, and then we have examiner judgment. And the top of the house, the examiner judgment will look at the activities that qualified, and they have the ability to move or make comments on the ultimate evaluation based upon their subjective evaluation. And so some of the things that you described would go into that subjective evaluation.
What is he stopping?
So I'm concerned because, the whole point of changing to these criteria is so that you would have an objective criterion, and now you're saying that the subjective part of it would help make up for that. So I would just suggest urge you to consider coming up with a criterion that would give greater weight to those kinds of community service
For your benefit, we
organizations.
have used the concept of multipliers, especially if you read the proposal in the equity for CDFI and low-income housing. We've heard they've had a difficult time attracting equity, so maybe a multiplier concept.
Yes, thank you. I would suggest that might be a helpful way of doing that. I do want to talk just very briefly about the financial literacy component of it. In the previous iteration of what the CRA analysis, that had been limited to LMI communities and communities of need. But now you're expanding it to any communities. And I'm concerned about that because, banks can go to, for example, an upscale retirement community in my neighborhood, in my district, and conduct these financial literacy classes, which are really nothing more than marketing schemes for their bank. And that would qualify under the service component of the CRA. What is the rationale of extending that from the communities of need to just anybody?
So as we went out in communities across America, we heard that the need across America is for financial literacy, and so people felt it shouldn't be just restricted to low to moderate income. So we put that in as a question.
Reclaiming my time, but do you understand that the purpose of the CRA is to help low to moderate income communities?
I do.
Okay, thank you. Thank you very much. I will, at this time, yield the balance of my time to the chairwoman.
Thank you for the questions.
If she is interested. Yield the balance of my time to Madam Chair.
Thank you very much. I started out discussing what was happening in Inglewood. Are you familiar with Inglewood, California?
I am.
Do you know about all of the stadiums that are being built and moving in?
I do.
They are now eligible for loans in a concrete way, in ways that was not in the existing CRA.
That's not correct, Maxine. Excuse me, Congresswoman. since 1993, it has been in this, that banks have allowed CRA credit for stadiums. So this is not a change to that program.
I'm sorry, my time is up. We'll get back to it when I have more time. Who's next? Okay. The gentleman from Tennessee, Mr. Rose, is recognized for 5 minutes.
Thank you, Chairwoman Waters and Ranking Member McHenry, and thank you, Comptroller Otting, for being here today. As we have heard a lot today, the Community Reinvestment Act modernization proposal offered by FDIC and the OCC reflects this significant shift away from the current outdated regime to a new one that should better reflect the realities of today's banking industry. I don't know that the proposal as it is currently written is perfect, but I do know that the current CRA has not kept pace with today's changes in technology, and current regulations and approaches create uncertainty for banks and can serve as barriers to carrying out CRA's intended mission. So I want to applaud you for taking on what obviously is, but for many, a contentious issue. As I reflect upon my own small business career and my involvement in community banking back in Tennessee, I'm just really struck by the notion that CRA hasn't been updated in a quarter of a century. And I know that if in my business I had not evolved sufficiently in a quarter of a century, that would mean trouble for my business. So again, I applaud you for taking this on. And I think this points to, despite some of the criticisms about the timing for moving forward, I think it points to the problem with regulatory burdens like CRA, well-intended perhaps in their beginning, but then they become static and concrete, and they interfere with the natural evolution and advance of small business. So I applaud you for moving forward, and I think it's time to do so. And I think that this probably is an area that we should revisit more often than every quarter century, and so again, thank you for doing so. I know that one of the facets of this proposal that aims to provide certainty to financial institutions is publishing a publicly available list of pre-approved CRA activities that will qualify for CRA credit. No doubt we've heard some discussion about some of those activities. Comptroller Otting, how is this initial list going to come together, and is it expected to be an exhaustive list?
Yeah, thank you very much. The list came together through the interagency work between the Federal Reserve, the FDIC, and ourselves of what current activities were being given credit under CRA. And so that got accumulated. We put it out in the body of the NPR for comment for people to be able to either react positively or negatively to that. It's the first time since the act was approved in 1977 there was any kind of list put forward. There's a commitment in the NPR to review that list at a minimum every 3 years. We'll make it a living and breathing. But just as important, we've created an intake where people can come to their primary regulator and seek approval on perhaps items that are not on that list today.
From the comments the OCC and the FDIC have received up to this point, do you think a list like this can help fix the problem of subjective and time-consuming examinations? Is that the crux of it?
I think it helps bring clarity both to the communities and the banks of what items can qualify for CRA. And so when a community has a particular project they're interested in doing, they know they can go to the banks and talk about getting CRA credit for that. And so I think that will dramatically, improve that. The other thing is often banks will do transactions that in the middle of their CRA exam they find out don't qualify. And so it forces people back to the most conservative, middle-of-the-road type CRA investments. And we want to encourage new and innovative ways to do CRA in communities that help low to moderate income people.
I've heard some criticisms that this proposal actually disincentivizes smaller loans. Do you agree with that assessment?
I do not, because we have a metric based in every assessment area that a bank operates in that will measure the units and the dollars.
Can a bank write just one large check to satisfy their CRA requirements under this proposal?
Absolutely not.
And I know you've covered this, but I want to give you a chance here in about 40 seconds, this issue of NFL stadiums. Just give you some time to respond to that. It sounds to me like you've pointed out an issue that's of grave concern to people by undertaking this process. But
I actually appreciate the interest on people in this item because it goes to prove that getting that list out and getting people's feedback is important of what really works for communities. And it's been done since 1993, so we're not doing anything new with this proposal other than identifying what has been historical practices.
Thank you, and Madam Chairman, I yield back.
Thank you. The gentlewoman from California, Ms. Porter, is recognized for 5 minutes.
Hi, Mr. Otting. Governor Lil Brainerd has been running point on the CRA modernization at the Fed. She gave a presentation earlier this month explaining how the Fed came to its blueprint, why the Fed believes that its version is more true to the purpose of the CRA than the OCC's version. Are you familiar with Governor Brainerd?
Am I familiar with her speech?
With Governor Brainerd herself?
Oh, yes, I am.
Okay. And you know that she's been working on economic policy for 30 years. She studied at MIT, at the U.S. Treasury, the White House, the Brookings Institute. The list goes on.
I am not aware that she's been working on it 30 years.
Do you think that Governor Brainerd doesn't understand your CRA proposal?
You would have to ask Governor Brainerd that question.
Do you think Governor Brainerd is somehow economically advantaged by the current CRA framework?
You would have
She
to
somehow.
ask, you would have to ask Governor.
Well, I'm asking
Brainerd
for
that.
your opinion.
I don't have an opinion.
You don't have an opinion about whether Governor Brainerd doesn't understand your CRA proposal or is economically advantaged by your CRA proposal.
You would have to ask her that question.
So you recently said in the Wall Street Journal that, quote, if you don't like the OCC's CRA blueprint, you are either economically advantaged by the current structure or you don't understand it. So basically, you're either corrupt and on the take, or you're not educated or intelligent enough to digest the OCC's proposal. What bucket should I put Governor Brainerd in?
I guess you'd have to make that decision yourself.
Was there a third bucket?
I wouldn't offer up an opinion.
Because you did say that if you don't like the proposal, if you oppose the proposal, which I oppose the OCC's proposal, you either are economically advantaged by the CRA, which I'm not, or I don't understand it. Which do you think applies to me?
You'd have to make a determination of how you would want to vote.
Is there a third category you'd like to develop for people like me that don't agree with you?
Not at this time.
How about Chairwoman Waters? She opposes the OCC CRA proposal. Would you say she is somehow
You would have to make that determination.
I would encourage you to understand that some people who don't agree with the OCC's CRA proposal simply have read the CRA, have studied it, are economic experts or have been on this committee, leading this committee currently, and simply have a different vision of the CRA than you do. And I would ask you to please be respectful, particularly in the press, about how you talk about those who disagree with you, because rulemaking is a collaborative public process, and each of us, whether we're a congressperson or we're just a member of the public, has the right to disagree. And it doesn't mean we don't understand or that we're somehow on the take under the current system. It just means we have a different vision. Mr. Otting, you also said that 9 out of 10 major banks are supportive of the direction the OCC is heading. Are you familiar with the American Bankers Association?
I am.
The top 10 banks in the country are all members of the ABA, and yet the ABA itself has put out a statement, which I have here and I'm happy to submit for the record. May I submit this to the record?
Without objection, such is the order.
The ABA said, we continue to believe that the nation would be best served by a final interagency rule that also includes the Federal Reserve, which would provide a consistent regulatory framework for all banks. That's the ABA statement. Yet you recently said 9 out of 10 of the major banks are supportive of the OCC proposal. I'm confused, Mr. Otting, which major banks were you talking about? Is this like a toothpaste commercial where 9 out of 10 dentists agree?
I think the statement you read is different than whether the banks support it. What they said in that letter is their preference would be that the 3 regulatory agencies come together on a final rule. That's one comment in that letter. The other comment is the major
Correct.
banks deciding that they would like to move forward. They have issues, and we've asked them to comment on those issues.
But
We will
reclaiming
look
my
forward
time-
those comments in the final.
Reclaiming my time, the American Bankers Association statement will be in the record, so that will speak for itself. But you said 9 out of the 10 major banks are supportive of the direction the OCC is heading. Who are those major banks?
I'd be happy to come by and have dialogue with you if you think that'd be appropriate.
You are unable to state for the committee today any major banks that support your direction?
We will file a comment letter with the comments with the financial institutions I've had discussions.
Thank you. I yield back.
The gentleman from South Carolina, Mr. Timmons, is now recognized for 5 minutes.
Thank you, Madam Chairwoman, and I'd like to thank you, Comptroller Otting, for taking the time to come and answer our questions today. This is an important hearing, and I appreciate your presence here.
Thank you.
I want to start at the beginning. Could you discuss what you think the original purpose and intent of the Community Reinvestment Act was, and share your thoughts?
Clearly in 1977, as the Congress was looking at the way banks were serving their communities, they found instances where there was redlining activities and discrimination activities, and what they felt is that banks should serve their entire communities to which they operate, and some of that activity was actually done by the U.S. government. And so the act was approved in 1977 that encouraged banks to support their entire communities, but required the regulatory agencies to do an observation of that. And then in follow-up succession acts, it was determined that the written reports needed to be produced to justify the bank's observations.
And we keep hearing a lot about football stadiums, and you referred to the 1993 date as the time which they were eligible for CRA funds. Could you talk about that history as well?
So just a point of clarification, the first time we could find where a athletic facility got CRA credit was 1993. So it wasn't like there was a change at that point in time. It's just the first time we saw the agency started to give credit. And these include soccer fields and AA baseball, stadiums and things like that. So it's not like a professional, but athletic facilities in 1993 is the first time we saw where banks were given credit.
And what percentage overall would you say go to these types of projects currently?
You mean in the total of CRA, there's $480 billion in annual CRA activity across the nation.
Less than 10%? Less than 5%?
In the basis points.
Okay. Thank you. I want to quickly talk about the list of activities that are CRA eligible in your proposal versus what is currently eligible. What are the differences?
100%? Yeah, 100%.
What are the differences currently versus in the proposal, just big picture?
We actually put on paper what qualifies and then publish that list, which had never been previously published.
So this will give banks more clarification,
Yeah.
and they don't have to wonder whether projects they're investing in will qualify or not, and it'll be...
Now, we did find geographic differences, meaning stuff that was being done in New York that qualified wasn't being done in other part, stuff was being done in Los Angeles that wasn't being done. So quantifying that list for the nation is what I would say would be different.
So a more
robust,
a better
complete.
framework to understand the entire program.
That's right.
I've had some concerns from people in my district. We have a couple of substantial banks there. They're concerned that with the proposal surrounding what areas qualify, that my community will receive less from those banks. I understand that, but I guess the next question is, will other banks that are currently not investing in our community make up that difference? Could you talk some about that?
I'm not aware of where any bank would pull back from a area based upon the revisions to what we're accomplishing. It will increase the areas that banks will be required to do Community Reinvestment Act activity. But I'd be happy to either call those banks or have dialogue with you through them to make sure that I understand their concern. But there should not be a community in America based upon what we're doing should see a reduction in their CRA requirements.
Okay, thank you. I've also heard some concerns from individuals and groups involved in providing affordable housing for LMI communities. What are your thoughts on how affordable housing CR investments will be affected by the proposal?
Well, first of all, the big challenge that we've heard about housing as we went across the United States and talked to people was attracting capital. Most people will tell you we can get all the debts we need for low-income housing, but attracting capital has been the big complicated part. So in the proposal, what we did is we offered up a multiplier for equity that goes into low-income housing projects and CDFIs, that if you provide equity, we've said, should we give 2 times credit or 3 times credit in the numerator for the formula? And that has been received quite well, I think, by those people who are participating in that industry.
And again, this is a process where feedback will produce a final result.
Right.
And that is a very constructive process.
Actually, getting to the multiplier actually came from the feedback process.
Thank you. I appreciate your time. I yield back, Madam Chair.
Thank you. The gentlewoman from Iowa, Mrs. Axney, is recognized for 5 minutes.
Thank you, Chairwoman, and thank you, Comptroller Otting, for being here. Appreciate having another Iowan here. It's good to hear that we're seeing some unity across the banking industry in support of the real purpose of the Community Reinvestment Act. Of course, let's go back to that, preventing discrimination and ensuring that people and communities are not left out of our financial system and our economy. That's the core of why we're all here. I'm telling you, I'm concerned that this proposal will take money away from states like Iowa. We know that this isn't just an urban problem or a rural problem, and we need to recognize that what's going to be helpful for areas here in D.C. might not be helpful in places like Creston, Iowa, in my district. And by the way, the needs in rural towns are different, as you well know. Maquoketa has different concerns than Corning, Iowa. Northwest and Southwest Iowa are different in very many ways. My concern then is that moving towards a one-size-fits-all proposal never works, certainly not when it comes to equal opportunity. So, Comptroller Otting, are you concerned that by giving all banks the same list of activities that are eligible for CRA credit ahead of time and reducing the importance of qualitative evaluation, as my colleague Ms. Wexton referred to earlier, that this proposal is going to reduce the incentive for banks to work directly with communities to make sure they're getting what they actually need from banks?
I do not think that it will do that. And as a point of clarification, in communities across America, and let's just take a particular regional bank that I know has a lot of branches in your district, they probably don't today identify that as an assessment area. And in the future, no matter where those large banks have, they will have to do CRA activities in those communities, and we will measure that. So it's our viewpoint that more activity will flow into rural communities across America than less.
Well, I'll be anxious to see that because the proposal talks a lot about reducing what are called inconsistencies in CRA evaluations. And I would argue that we should be seeing inconsistency. That's the beauty of the different communities in this country and the differing needs that they have. I would say that the inconsistencies would show a well-run program. If we're saying that everybody falls into the same category and we're not looking at these different variables, this whole thing should be based on the variables that are brought to the table. So therefore, you're going to have inconsistencies in how things operate. My concern is that this inconsistency is what happens when banks are properly listening to what local communities want and are meeting those needs, and we're going to lose that in this new proposal.
Could I respond to that real quick?
Sure.
So I don't think we lose that because in preparing the list of everything that's being done, we've actually discovered for a lot of people other things that could qualify in their community. But just as important, we've created an intake valve where someone in your community can come to their regulator and say, hey, we're thinking about doing this. It's unique. It's not on the list. Can we get pre-approval before we do it and then find out after the fact it doesn't qualify?
Well, I'd love to see that part of the proposal in detail.
It's in the NPR.
Yeah, and I hope that somebody who's from the Midwest really understands the issues that we're facing, not just with this, but in general with the economy overlooking parts of this country. And my job is to stand up for states like Iowa and make sure we get what they need. So please make sure that you use those good Iowa roots to ensure that we're protecting people in states like ours. Moving on, the proposal also makes some changes to the assessment areas that banks have to serve, including creating deposit-based areas. There's obviously a balance here. Having a physical bank to go to is important for a lot of my constituents in Iowa, and there's a lot of research showing that people and small businesses are more likely to want to borrow from their local bank. That said, I absolutely recognize the way people bank has changed, and that regulation should reflect that. But the threshold for an area to qualify is 5% of the bank's deposits. Is that correct?
Yeah, so today there is no criteria for an internet bank to do any CRA other than where their headquarters is or the identified assessment area. So we put in the proposal that if 50% or more of your deposits come from outside your assessment area, those markets that are 5% or more would be deemed an additional assessment area. But we've put that out for comment and have asked the question, is 5% the right number? But this is the first step towards trying to have internet-based providers provide dollars back into local communities.
Okay. Well, I'm glad you're going to continue to look at that because it's 5% of retail domestic deposits, if I'm correct. And I would say that, you know, we only have 4 states, California, Texas, Florida, and New York, that even have 4% of the U.S. population. So for a nationwide bank, I think a small state like Iowa or West Virginia is going to have a tough time qualifying as an assessment area.
It's 5% of that bank's deposits, not the banking industry.
Okay, well, that's good to hear. Thank you. I'm out of time.
Thank you very much.
Thank you. The gentleman from North Carolina, Mr. Budd, is recognized for 5 minutes.
Thank you, Madam Chair and Comptroller Otting. It's good to see you today. So before I dive in on CRA, as you probably know, the House is going to vote on a bill later today to comprehensively reform the consumer credit reporting system. I don't know if you've seen many news reports on this. I doubt you have because the committee just held one hearing on this, and it was in February of last year, 2019. But I would like to know what the OCC would think about the likely consequences of removing accurate information from those credit reports. For an example, the bill would shorten the time that some information can remain on the credit report from 7 years down to 4 years. And it would virtually remove all predictive data from the credit reports. So as quickly as you could, has the OCC looked at the impact on the safety and soundness of making such broad changes to the contents of credit reports?
Excuse me 1 minute. I'm not as familiar with it, but the person who would be is right now.
Thank you.
So we're aware of it, but we haven't issued an opinion on it at this point in time. So,
Okay, that's a pretty significant bill that we're voting on that has virtually no engagement. So it seems like we should have done more in the House to present that evidence to you and have you weigh in on that. So I want to move on. The regulations in the CRA have not been updated in about 20 years. I think that's been discussed a little earlier today. In fact, they were written even before interstate branching and the internet banking even existed. However, critics of CRA reform say that modernization would decrease lending in low to moderate income communities. Can you elaborate on whether or not you believe your proposal will increase lending in low to moderate income communities? And do you believe that if the regulations stay as they are without reform, that it might actually hinder lending in those communities?
we absolutely do think it will increase lending in low to moderate income areas.
The reform would, correct?
Pardon me?
The reform would increase.
Yes, it will absolutely increase it through a number of reasons. One, offering accountability by having a measurement system that we can all look at, both on units and dollars. By eliminating low to moderate income qualifications of loans that actually go to high income people in those communities across America, and then also increase the reporting that is done in all assessment areas for a bank versus just a small segment of the bank's assessment areas. And we'll have tremendous amounts of better data to be able to share with Congress once we complete this.
Thank you. You mentioned also in a recent Bloomberg article that you appreciated the Fed's framework and even incorporate some of it into your proposal. Can you tell us some details on what aspects of the proposal come from the Fed's ideas and framework?
So in the individual assessment areas, we always felt units and dollars were important. And the OCC and the FDIC were talking about, should we limit the size of a transaction to drive that there's granularity in the actual units? The Fed came up with a process of taking a bank's low to moderate income loans divided by their total loan volume and then comparing that both to the population and the transactions in the market. And we adapted that into the OCC and FDIC proposal. So a big part of what Governor Brainerd had with us in dialogue is included in the OCC and FDIC proposal.
Sounds like some good common sense. Thank you for that. And Madam Chair, I do yield back. Thank you.
Will the gentleman yield?
Yes, ma'am, I yield back.
The gentleman from Utah, Mr. McAdams, is recognized for 5 minutes.
Thank you, Madam Chair, and thank you, Comptroller Otting, for being here today. This is such an important topic. The CRA was instrumental civil rights legislation from the 1970s meant to address redlining. Its fundamental goal is to ensure that financial institutions have an affirmative obligation to serve the credit needs of local communities in which they are chartered. And I'll repeat what I said when the FDIC and the Fed were here in December. CRA reform must preserve the spirit and intent of the CRA to benefit low and middle income communities and individuals, while also updating the CRA for a 21st century financial system. I do have concerns about this not being a unified rulemaking with the Fed. And I also believe that we should have a fulsome comment period. It's more important to get CRA reform done correctly than hastily. A number of our financial institutions have used strategic plans in the past to solicit community input and to develop their CRA plans. And as a former mayor, I participated oftentimes in some of this strategic planning. So I was glad to see that that was maintained in the proposal. Thank you. With that, I do have a couple of questions. Comptroller Otting, I have some concerns with the 50%, 5% system that you're setting up with the proposal. Rather than drive investments and lending into underserved areas, I think what that will ultimately do is shift activities from quote unquote one hotspot to another hotspot. I really think you're just going to shift focus into high population states and cities like New York City, Los Angeles, Texas, and Florida, leaving the rest of the country in the same spot that they are now. Presuming that a bank must set up new assessment areas where they don't currently have a footprint, how should they be expected to know what the credit needs or community development needs of an entire state or a large MSA are? And wouldn't this just lead to a cookie cutter, least common denominator approach to meeting that obligation?
I think they would do it just the way that institutions do it today. They do it usually through community reinvestment officers in those respective markets that tie into the local community, participate in what the needs are of the community, and then take those back to the banks and share, where the opportunities are.
And so my concern is really the qualitative nature of that engagement. As a former mayor, I know how much these institutions reached out to try and understand community needs, not only with mayors and local officials, but other community members. And I worry that the 50%, 5% paradigm shifts really undermines the qualitative nature of that local engagement. Moving on to a different topic, when visiting with a number of my stakeholders, they've also expressed concerns with some of the changes to the community development section, specifically regarding the promotion of economic development by financing small businesses. In the proposal, some of the language on supporting economic development by financing small businesses was eliminated. In light of the critical importance of economic development and job creation, retention, and/or improvement for low and moderate income individuals, and the demonstrated success of these programs to create opportunities, to create jobs, self-reliance, and prosperity for low and moderate income individuals in underserved communities, what was the policy reason for eliminating those provisions from the Notice of Proposed Rulemaking?
I'm not aware where we've eliminated. And you're saying in the investment test?
And economic development specifically.
Yeah, I don't think we did. Maybe we should follow up with
Yeah, I can share with you some of the language that raised some alarm and concern to some of my...
This is a great time in the comment period to give us feedback.
That's great. That would be very helpful. Thank you. Lastly, Comptroller Otting, one of the concerns I have, and one of the areas that I'm focused on in any CRA reform proposal, is what does reform mean for affordable housing and market rate housing development? Utah, like many places, is facing a growing housing shortage with quickly escalating home prices. So this is important for me and for my state, particularly since the proposal opens up a number of business lines that can count towards CRA obligations. I worry that the focus on affordable housing may fall by the wayside. Has the OCC or the FDIC released any analysis on what the proposal would mean for supporting affordable housing development, and if we see a shift in CRA activities away from that space?
So the list of qualified activities are what was currently being done across the United States today. So we haven't opened it up. We've just clarified what gives CRA credit today. I think your issue on housing is an important one. As we've traveled around the United States, you used to hear about the need for jobs and activities, and then housing. Now it's housing is one, housing is two, and housing is number three. So I think that's a valid point.
Okay.
And maybe we can talk more about that when we come by.
Thank you. And my last question, looks like we're out of time, but I want to focus on the ability to continue to innovate and not just have cookie cutter proposals, but innovative proposals of CRA. So we'll follow up with that.
Okay.
And with that, I yield back.
The gentleman from Wisconsin, Mr. Stahl, is recognized for 5 minutes.
Thank you, Chairwoman. Thank you, Comptroller Otting, for being here today. I appreciate your work at looking at CRA as a way to update. It's a regulation, as we've noted here today, that has not been updated for quite some time. And I think there's been pretty healthy dialogue also about the concern of implementation. And I'd encourage you to continue to look as to ways to take this regulation and find ways to improve the efficiency of the implementation. Because I think that's been discussed pretty broadly, I'm going to pass on asking questions on the implementation today and shift gears slightly to the Volcker rule. As you know, Representative Gonzalez and I have led a group of members from this committee in writing to you and the other financial regulators regarding the Volcker rule in its reform. The letter that I sent was dated December 3 of last year and argued that covered funds provision in the Volcker rule were overly broad and unnecessarily included venture capital and other long-term funds. Prior to the implementation of the Volcker rule, banks supplied a significant amount of capital to venture and growth funds. And this was especially true in regions like Wisconsin and across the Midwest that aren't typically the magnets for this type of investment. Exempting venture and growth funds from the Volcker rule's covered fund definition, I believe, would spur increased investment in innovative companies in places like Wisconsin, across the Midwest, and across the country. Could you comment on your view of the need to fix or revise the Volcker rule, and if so, what you've been doing to address this?
First of all, I do agree with your comments. As a former banker, we were actively participating in those small tranches of various forms of, preferred or common or subordinated debt that these companies needed before they could go out and access the larger dollar amounts that generally were available through Wall Street. I viewed that as a critical component of capital for growth and expansion of those businesses, and the Volcker rule took that away. There has been a high priority amount of work, I would say, on this particular topic. If I could ask you to wait a week, I think you would be readily pleased. I would want to comment publicly until all the agencies have approved it. But I would say we are in a short stroke, so to speak, of accomplishing, I think, the modifications that we have described.
I appreciate the feedback. I'll wait anxiously to see what you put out in a week. Appreciate you coming here today, and I yield back.
Did the gentleman have a specific request? I'm sorry, Oh, you did yield back? Thank you. The gentlewoman from North Carolina, Ms. Adams, is recognized for 5 minutes.
Thank you, Madam Chair, and thank you, Comptroller Otting, for being here. CRA is meant to meaningfully address redlining and ensure access to capital in LMI areas, including for small business lending. There continues to be a need for affordable small business loans for low and moderate income individuals and those seeking to open small businesses in low and moderate income communities. A recently released CFPB report notes that reductions in access to capital for small businesses have been exacerbated by bank and branch closures, and thus there are fewer former banking options available to small businesses. So despite the numerous calls to strengthen incentives for small business lending and improving data collection, this proposal fails to do that. In fact, your proposal's one ratio and credit for large infrastructure projects will lead to banks focusing on big deals rather than small businesses, business or home mortgage lending. So how does your proposal define small business lending, and what specific ways does it seek to increase access to capital for small businesses already located in the LMI communities?
Yes, so in the proposal, we are raising the dollar amount of small business lending that qualifies for CRA from $1 to $2 million, because as we've traveled around, we heard that was too restrictive for businesses. And so we think that has a positive impact on dollars that can flow into those communities, specifically in the CDFI arena, which is where a lot of small business lending is being funded by CDFIs that are in those communities and know the people in those communities. Two, I think, very important things is, one, we've clarified that CDFIs will qualify for CRA, and we've also put forth in the proposal that the equity that goes into CDFIs could be multiplied, meaning that if you were willing to put $1 of equity in, you could get $2 or $3. So we think we've had a strong vision on small business lending of how we create dollars. I would also just add a comment, is we are seeing, as banks do a less effective job in small business lending, that internet lenders are coming into that space in a fairly robust way.
Okay, so I have another question as well. It's paramount that Community Reinvestment Act is implemented in a manner that's consistent with its original purpose to ensure that all communities, including low to moderate income communities, have equal affordable access to the system, the banking system. Concerns have been raised that the proposal decouples the link between CRA and the legacy of redlining. We've talked a lot about that. That it was intended to redress, and specifically the link to minority communities that have been systematically discriminated against. So would you explain how your proposal specifically preserves the legacy and the mission of CRA as it was originally intended?
The CRA, we believe there's nothing that we're changing that changes that mission or requirements. As you know, we have fair housing and equal credit requirements also, that we look at financial institutions' activity on an annual basis. If there are any violations of that, we're required to report those to the Department of Justice or HUD. So I don't believe there's any changes in this document that takes you away from the original intent of the 1970s, and in my mind actually enhances it because there's greater accountability.
So would you, yes or no, do you believe that modern day redlining occurs?
I do think there is modern day redlining.
Okay. Let me ask one other question. I want to return to the discussion on opportunity zones and follow up on the concerns that Ms. Tlaib raised during her line of questioning. You indicated in 2018 that you expected to offer CRA for opportunity zone investment. Your proposal includes that. So are you are aware, or are you of the concerns about the legislation due to the lack of accountability and real oversight? Yes or no? Are you aware of that?
I'm sorry, I missed the question.
Well, are you aware of the concerns about the legislation and its lack of accountability and real oversight?
On opportunity zones or on?
Opportunity zones.
I've read comments that people feel like that perhaps some of the markets didn't meet the original intent of the legislation, but I have not spent I do not spend a lot of time on the opportunity zone side.
So, I mean, there's been a lot of issues raised about it. Are you interested in pursuing it?
We're not impacted by the opportunity zones because we don't have jurisdiction, nor it's generally a tax related issue. And so we're not directly involved in the opportunity zones. The only time there's crossover is where we've said that if a low to moderate income area is also in an opportunity zone, then they can
I'm out
use
of
CRA
time, sir.
credit.
Thank you very much. I yield.
The gentleman from Texas, Mr. Gooden, is recognized for 5 minutes.
Thank you, Madam Chairwoman. Thank you, Mr. Otting, for taking the time to attend today's hearing, even if you haven't always felt welcome at times. Before presenting these questions, I just wanted to highlight the significance of today's hearing and a few pressing concerns around the intent and purpose of the narrative built around today's hearing. The CRA regulations that were in place since 1995 lacked objectivity, fairness, transparency, and consistency, and they were very confusing. And this isn't my personal take, but the concerns voiced by legitimate stakeholders in the 1,500 plus comments on the proposed note over the past 18 months. And I see your heads nodding in agreement. 98% of the comments said that current regulations are confusing. 94% of the comments said current regulations lack objectivity, fairness, and transparency. And 88% of the comments said that current regulations lack consistency. And in fact, the current regulations are riddled with loopholes, as we've discussed here, some that even allow for CRA credit for loans to wealthy households in the LMI areas, which inevitably lead to their gentrification, which is something that my colleagues across the aisle have voiced some disturbance with, and I agree with them. So it's only natural to conclude that we actually really do need broad reform of these policies, and we need it to be consistent, transparent, objective, and as clear as possible. And I believe that that will fulfill the CRA's true intent and purpose to ultimately serve LMI households and individuals. However, instead of supporting your reforms, which I think are great, the majority has decided to question everything throughout the stage, including their implementation. And I've heard a lot of reliance today on dissident voices. Earlier today, you were questioned about your knowledge of the overwhelming opposition that we had here a few weeks ago. It was difficult for you to get the response out, but only one Republican was at that. It was very partisan. So we've heard about this letter that I think was sent to you by members of Congress. They were all Democrats, so we've seen a very partisan take on this. But nonetheless, you're here. We're happy you're here, and thank you. I have a few questions. You mentioned that expansion of qualifying activities will encourage more capital investment, lending and services in LMI rural and distressed communities, and would you please expand on that?
Yeah. So 2 ways we think that that works, or actually 3 ways. One you identified by not allowing people to get credit for mortgages to high-earning people in low to moderate income areas. Second of all is publishing the list of what qualifies, so communities can look broadly in their community and say, where could we get credit for CRA, which would motivate a bank to take on transactions like that. And then the third is at the top of the house, once we look at the individual assessment areas, a bank can choose to move dollars at the top of the house around once they've met a certain criteria and go out to places like Indian country or family farms or do additional small business lending outside their assessment areas. We think that will populate more activity across America.
Thank you. In December, you mentioned there was a lot of support for the reforms from the public as well as banks, but you also stated there was strong opposition from certain groups. Who are those groups, and why are they against these?
There's a long list, but I would say, you know, Congressman Potter tried to put it into 2 buckets. Either they're on the take or they don't understand it. We've spent a lot of time trying to make sure people understood it. As the comments that you made, objectivity, transparency, all those things are what you would think people would want. But there are groups who are economically benefited by not having that objectivity. And when there is a merger or an acquisition, they show up and basically demand money from financial institutions or not support the merger.
Which leads to those loopholes I mentioned. And I'd like to know how you've tackled the issue in your reform proposal to kind of take care of getting rid of these loopholes that people are taking advantage of.
Well, I think you do it by having objectivity. Because if at any point in time, and if we're proficient at our goal, a bank will be able to know every 90 days whether they're in compliance with CRA. It's like capital. If we said to a bank, we're not going to tell you until after the exam whether you pass the capital exam, people would say, well, that's the stupidest thing I've ever heard in my life. But that's kind of what we do with CRA. So if you can look at every quarter your balance sheet and decide, am I in compliance with the capital laws? Why can't we decide every 90 days if you're in compliance with CRA?
Thank you. I appreciate your time, and I yield back to the chairwoman.
Thank you very much. The gentlewoman from Pennsylvania, Ms. Dean, is recognized for 5 minutes.
Thank you, Madam Chair. And Mr. Otting, I too thank you for being here today, and I'm hoping you're listening to our suggestions and our concerns. I think everybody in this room, both sides of the aisle, want to strengthen CRA, to see that it is as effective as possible at doing its mission, to build community, to build wealth, and to eliminate discrimination. So I wanted to first point out opposition to your proposal that is across the industry. It's across community groups, agencies. For example, FDIC board member Martin Grunberg, as some have said here, voted against the proposal, describing it as, quote, deeply misconceived proposal that would fundamentally undermine and weaken the Community Reinvestment Act, end quote. deeply misconceived that would fundamentally undermine and weaken. It's also notable that the Federal Reserve did not join in this proposal due to remaining concerns about the proposed rulemaking. Federal Reserve Board governor saying, and I quote, "Given the reforms to CRA regulations are likely to set expectations for a few decades, it is more important to get the reforms done right than to do them quickly," end quote. I couldn't agree more. And I was hoping that somewhere in your testimony today, you would pause and say, I have to pause. As a banking regulator, I have to listen to these other voices, including advocates who have come before this committee. So I ask that of you. Will you consider a pause and take input from these hearings and from these other regulators?
Yeah, you have 40 days to complete it.
No, I asked you for a greater pause.
You have
not the 40 days
to comment in the period.
Will you consider a longer period of
The
time?
answer is no.
You will not. Why not?
Because we feel that this has been a multi-year process where we've extracted a lot of feedback and comments.
Other experts, I'll reclaim my time. Other experts in the field do not believe it has been thoughtfully
Everybody's
considered.
entitled to their own opinion.
Exactly. I'd like to talk about the problems in the proposal that affect my community. I represent suburban Philadelphia, Pennsylvania's 4th Congressional District. In my home district of Montgomery County, we've seen some of the highest proportions of bank closures, including over 15% of locations in the years 2008 to 2016. We know this disproportionately affects low and moderate income communities' access to financial products. Do you agree with that?
I'd have to see the data, and I mean, you're asking me
this
to
is
comment.
data you should.
You're asking me to comment on something without being able to see the data and analyze it.
We'll be sure to share it with you, but it's
then
actually
send it
important to
over.
your
I'll be happy to
rulemaking.
look at it.
It's important to your regulation and rulemaking. Certainly.
I'm not sure I
Excuse
totally
me,
understand
excuse
your
me.
question. If you're asking me to
Excuse me,
respond
I
to
will
something-
restate the question.
Okay.
I'd appreciate you not talking over me. In your rulemaking, did you consider the closing of branch banks and what impact that has on low and moderate income communities? Surely you must have.
Yeah, the answer is yes. For the first time ever in the history of CRA regulations, we're giving banks credit for maintaining or opening LMI branches. Never been done before.
And yet this rule will continue the closing of bank branches in low to moderate income. That is the assessment that we have seen. I'll continue. This affects the core of the Community Reinvestment Act's mission. According to the Philadelphia Federal Reserve, the importance of bank branches and the service they provide lie at the very heart of Community Reinvestment Act. By eroding incentives to open bank branches in low and moderate income communities, in your proposed CRA rule, I'm afraid you're going to hurt my constituents rather than help them in your reformation of CRA. Do you understand the connection between access to community banking in areas that are low income and access to wealth, access to capital, growing a business?
I do, and I see nothing in the rule that would support your statement.
Well, you should take a look at the research that's been done that shows that you will actually dilute the ability of folks to.
Again, if you'd like to send the research over, we'd be happy to review it.
I'm certain you're well aware of it, sir. And that is what you are actually in the business of doing, collecting the research and understanding the impact of your reform to CRA. Finally, I want to say something. I find your comments about discrimination puzzling. How is it that a man in your position, 30 years in banking and regulation, said in 2018 before this committee, and then repeated today that you have not seen discrimination? I don't know how you've been in this country and not seen discrimination. You said in 2018 that you didn't watch TV or read newspapers, and you had not seen discrimination. Are you the best person to reform this
Gentlelady's
landmark
time has
legislation?
expired. You may submit your additional statement for the record.
Thank you, Mr. Chair.
You're welcome. The chair now recognizes the newest member of the committee, the gentleman from Texas, Mr. Taylor, for 5 minutes.
Thank you, Mr. Chairman. Appreciate it. Thank you, Comptroller. Appreciate you being here. I just wanted to make sure I kind of understood the federal process. Now, you're making a rule. It was published, I believe, on January 9th. A letter actually was written about it December 11th, so clearly before you published it, people knew about it because they were already asking questions. Are you complying with the federal laws as they are written in your rulemaking?
We are.
Okay, and so it isn't that what you're doing isn't in compliance with the law, it's just that people, I guess some people here are unhappy with the laws as they are written. Is that a fair?
They're unhappy with the comment period, which, you know, as you recall, back in August of 2018, before that, we spent months and months and months going around to communities across America and soliciting feedback. We produced an ENPR that had roughly 40 questions that we asked people to give us feedback on. Then from those questions, we again went out around the communities across America and started to put a framework together and talk to people about that framework. And so between August of 2018 and December of this year, which was roughly 14 months, we entertained concepts, thoughts, and opinions, and then produced in December, on December 12th, the actual notice of proposed rulemaking. Then it was actually published in the Register on January 9th, offering up a 60-day comment period, which we knew it would be long, so it turns out being 88 days in total. And so that's, people are, you know, we've been on a long-term process that people want to describe as short-term.
So the 1,500 comments you're referring to, were those collected subsequent to the publication on January 9th, or were they?
No, as part of the comment period, we got 1,500 comments, but there were meetings with thousands of other community organizers, nonprofit, civil rights organizations who came to the OCC, or you may or may not know, we went around to markets across America and hosted bus tours where we went into low to moderate income communities and met with community leaders to find out what are your needs and how can CRA fulfill those.
Well, it certainly, I mean, thousands of meetings, bus tours. It seems like there's been considered effort to get input. I mean, is that?
Enormous, more than I'm aware of for any other rule.
Wow, I mean, that's terrific. I applaud you for that level of effort, engagement, reaching out to stakeholders. And I assume that you weren't just meeting with bankers, you were meeting with people who were applying for loans, you're meeting with
most of those
community interest groups.
75% were community leaders.
Wow, okay. So you're not even really going so much to the people that are having to comply with the CRA and fill out the forms, but you're going to the people
who did low to moderate income housing, people who did CDFI activities, which is small business lending, the real, you know, the real true people that were in communities doing activities. That's what we wanted to hear from.
Well, it sounds terrific. I mean, I wish we had this kind of effort to bring in input, and clearly you're modernizing an act that is in desperate need of it. In terms of modernization, just shifting slightly, you seem to have indicated that people or bankers were gaming the system. How were they gaming it? And one you referred to the $1 equals $4, but could you sort of expand on that?
Yeah, I don't know if I would say gaming's the right word. Just structurally, they had the ability to do this. And what they were able to do is when a mortgage is originated either as a single mortgage, a pool of mortgage, or it's created into a security of low to moderate income borrowers, banks could trade those items, and every time they traded those items, it was counted as 100% for CRA. And so as we've looked at that, we felt that was one of the ways that we wanted to analyze a bank's long-term commitment on their balance sheet as a percentage of deposits. So by doing that, we're eliminating that motivation to trade those securities around, that you sell them to me and I sell them to her and she sells them back to me and I get $1 of credit every time that mortgage traded hands in accomplishing my CRA, but not one new dollar was going into that community.
And so how are you adjusting that? So I think the difference, is between originating and holding a mortgage, right?
Yeah.
So the person that originates it may not be the person that holds it one quarter or the next quarter or the next quarter. So,
Yeah.
so a loan portfolio can move around.
So
how are you changing that?
So the person who has it on their balance sheet will get credit for the length of time they've held it. And the person who originates mortgages and sells them off will get credit as if they've held that mortgage for 90 days, even if they've only held it for 1 day. And that's a part I would say, we talked about, well, what are the top 10 things you're hearing about? In our dialogue with the financial institutions, they're saying that may be too restrictive, and I think we'll get some comments back through the period, which will cause us probably to look at that and decide, did we pick the right number, 90 days? Should it be 180 days? We clearly don't want, by any means, to reduce the amount of dollars that are flowing into communities.
All right, thank you. Appreciate that. Mr. Chairman, I yield back.
Gentleman's time has expired. The gentleman from Illinois, Mr. Garcia, is recognized for 5 minutes.
Thank you, Mr. Chairman. Good afternoon, Mr. Otting. First, I want to go on record as taking strong exception to your earlier characterization of the CRA as some sort of an instrument that people in communities use to extract dollars from banks. I do so because I came to know one of the CRA's champions in Chicago, Gail Sincata, community activist, community builder, renowned across this country by people who work in low-income and working-class communities and to build them up. The topic at hand, given the proposed measure of CRA qualifying activities is dollar-based per your proposal, banks would be encouraged to engage in high-dollar, simpler projects. As we discussed today, that's likely to include flashy investments like stadium renovations that make it easier for banks to pass their CRA examinations, but do little to help low-income communities CRA was written to serve. Mr. Otting, there are many smaller, more complex projects worth investing in my district. CRA is helping to drive that investment. I'd like to tell you a couple of stories. One, Gabriela Roman is an executive director of Spanish Coalition for Housing, headquartered in the Hermosa neighborhood in my district. She writes, quote, "We refinanced our main office building at 1922 North Pulaski in 2018 for $670,000. It took us a long time to find a lender because it was a small deal. We eventually refinanced with a smaller bank that made the loan and a part of their community reinvestment activities. The office serves about 4,000 community residents each year. Lulu and her husband, Rupert, live in Belmont-Craigett neighborhood in my district. They have a long history on the Northwest Side with the Housing Center, starting in 2013 when the couple purchased their first home after completing our first-time homebuyer class. We were able to take control of our finances with the class and figure out what best fit our income in terms of finding a loan and a property. Lulu said, and we learned what we can afford and what we cannot. Lulu's involvement with the center has blossomed from there. She became a block leader, organizing Play Streets events that provides families safe places for their children and hosting neighborhood meetings to discuss residents' concerns and issues. This is what community building is about. Lulu's first-time homebuyer class was supported by CRA contributions from financial institutions who considered the donation part of their CRA investment strategy and support. As a small nonprofit organization, Lulu would be unable to continue those classes providing necessary education and engagement without CRA contributions. Mr. Otting, if your proposal is adopted, all banks will need to do to meet their CRA obligations is invest in a few high-dollar projects with scale. I'm concerned that projects like the ones that have helped Gabriela and Lulu will be neglected. Have you considered the likelihood that banks will abandon their investment in worthy projects in needy neighborhoods like the ones I've described?
First of all, I love that story about Gabriel and Lulu, and I think those stories are told all across America where
And to my question, sir?
people get the chance to be part of the American dream. First of all, I think maybe you don't totally understand our proposal. In the assessment areas, we are measuring units and dollars. It isn't that no financial institution can do a couple large
So
transactions.
you're not concerned that it will have the impact that I described? Yes
No,
or no?
I am not.
You're not, okay. You've been a banker. What's the incentive for a bank to say, I will fund one large project instead of 100 or 1,000 smaller projects? Isn't it easier to just fund one large one?
The structure that we're proposing will not allow them to do that.
In my opinion, and I have read it, and I'm an urban planner and a community builder for many decades in Chicago, that it will. So thank you for your answer. I'd like to enter into the record, Mr. Chairman, a report on community reinvestment from the Resurrection Project in Chicago. It provides for affordable housing, financial education, and immigration services on Chicago's Southwest Side.
Without
Chairman?
objection.
Thank you. The report describes $537 million in community investment that the Resurrection Project has created or preserved. Behind this figure are thousands of homeowners helped, affordable housing units created, spurred economic development on retail strips in that community, and foreclosures prevented. The CRA helps make this possible. I urge you to rethink your proposal. Thank you, Mr. Chairman. Thank you.
The gentleman's time has expired. The chair now recognizes the gentleman from Georgia, Mr. Loudermilk.
Thank you, Mr. Chair. Mr. Otting, thank you for your patience. I think we're at the bottom of the ninth. I'm the closer, so maybe we can wrap this thing up. I really appreciate you being here. Thank you for what you're doing. There's something that's kind of been lost in the last few years here in Congress, and it's constructive dialogue where we can speak to each other as adults. I apologize that some of my colleagues aren't able to do that, but I think it's important that if we're actually going to get to something for the American people, that we can do that, and we're always going to have differences. I think it's the CRA. It's beyond time for us to address these issues, and I'll get to the CRA in a moment. But my focus, especially having rural areas that were really hit hard during the financial crisis. Georgia lost more banks than any other state. We still have had a problem with de novo banks, new banks starting up. We still have about 3 counties that don't have a bank branch at all. Where you have that, you have the lack of capital and lending, and we need to do something to spark that going in. Now, I need to make sure that everyone has access to capital, and one of the areas that I'm concerned about relating to that is valid when made. There are some businesses out there that I think have been wrongly characterized that are providing funding to areas that other banks either aren't or cannot because of the lack of small dollar lending. And as you know, that because of the Madden decision, the court deviated from almost 2 centuries of precedent of when a loan is made and that loan is sold, that the interest rate of the original loan stays with it, and that is in jeopardy. Could you explain why it's important for banks to be able to transfer loan risk off their balance sheets into the market?
It creates liquidity, and certain people have the ability to have origination capabilities and be out in geographic markets or vehicles to create that, and then often there are investors who will look to provide the capital to fund those loans. And all of a sudden, if that whole model is disrupted, because if I'm a buyer and maybe that interest rate is going to change on me, I probably wouldn't buy that asset. And as you know, we did not support the Madden decision. We have an NPR out that we think will modify this, and we're highly confident. There's been some action by a magistrate court last week that on a 1848 law that we had provided them, and we're optimistic that we'll get this resolved in 2020.
Well, I appreciate that, especially with a patchwork of interest rates that we have state by state, which as a Federalist, I do support the ability to do that, but you do have to have consistency, especially with low dollar lending, and that's something that is very important, I believe, especially in today's environment when there's been studies that have been out recently that the majority or 40% of American families could not afford a $1,500 emergency right now without borrowing the money. The problem is we don't have access in many cases to go find sources for that money. And I appreciate your bulletin encouraging banks to get back to small dollar lending, but that was almost 2 years ago, and we need some rulemaking. Can we expect the agencies to take action on small dollar lending?
You can in 2020.
Okay, thank you. That's very encouraging. A little bit of time left. Do want to touch on something that I think others may have spoke about, which is the CRA.
I just look forward to having a CRA modernization completion party, and that we all can come together as a nation, recognizing that I think this rule will support rural America. It'll support low to moderate areas across this nation, and we can get the capital and lending out that those communities deserve today.
And I agree that there is a lot that needs to be revised, and there seems to be there's a fear of change in this city. We've seen it when technology companies have come in with new technology ideas. There's a fear of doing that. Even though those technology companies often focus on the low and moderate income areas, or as a new term of banked and or unbanked and underbanked. I also think that unfortunately you came in to do this during an election year. Had it not been an election year, or quite frankly, who appointed you to this position, you may have met with some criticism, but not the vitriol that you have right now. I encourage you to continue going with your patience and perseverance, because I think in the long run, everyone will see that those that they're afraid of being harmed will actually be benefited from your actions. Thank you. I yield back.
Gentleman yields back. Mr. Otting, thank you so much for appearing today. I will yield myself 5 minutes. Sir, you on page 11 of your testimony addressed the question of astroturfing. Are you familiar with the term and your testimony? And you focus on advocates who stuff the ballot box.
Congressman, could I ask you just to speak up a little bit for me?
Surely, thank you. I'll do so. You focus on advocates who stuff the ballot box. Is there a reason why you have chosen advocates as a term for stuffing the ballot box?
Is there
You
a
focus
reason?
on advocates. Who, when you refer
No,
to
we focus
advocates,
on everybody who wants to make a comment.
Okay, I'm pleased to hear you say this because, as you know, you were affiliated with an entity that was once cited for stuffing the box, as you put it.
That is not a true statement.
Okay, would you kindly explain, please?
Yeah, so this was by a group in Northern California called the California Reinvestment Coalition. They made an accusation that One West Bank and myself were involved in that activity, and that is not true. That's slander on their part. We put a letter up on our website and said, look, if you want to be able to send something out to the regulators saying that One West Bank does a good job in their community, you can use this as a foundation, but we would encourage you to customize that. And they said, CRC accused that some people submitted false letters. We were not involved in that process at all. I would never do something like that. And it's no different than the letter CRC sent out yesterday to their members saying, change the letterhead here and send this in to the OCC for comments. So we'll see a lot of comments coming in from the California Reinvestment Coalition with similar concept. But I can assure you, we would never do anything like that, nor would I ever participate in anything like that.
Thank you. Given your level of sensitivity to the issue, what have you done to prevent this from occurring?
It's very difficult, to be honest with you, because the comment letters that come in, we accept anonymous comment letters in through the process. But what we do is all letters that come in, we log them in, we look at the issue, we decide if they're actionable, and then we spend time on those letters to understand. So it is a bit of a complicated issue that can occur with the way the structure of this system is today.
With limited time, do you give an admonition on your website?
Do we give a what?
Do you give a warning, an indication that this type of activity is unacceptable?
So we use the federal system, and so this isn't an OCC system that we use. We actually use where the proposed rule is posted, and then the comments come in, and then we, just like everybody else, including yourself, you would like to, can go in and look at the comments.
Do you?
And is there a warning on that system? There is not.
Okay. And would you propose having some sort of admonition? Would that be something appropriate?
I think we all should have a responsibility that if you're submitting comments, you know.
I'm going to have to ask you if there's a yes or no. Sometimes I don't know whether people have said yes or no when they finish. So.
Well, the problem, I would say yes, but here's like it is. I would be concerned that people wouldn't offer their comments.
I'll accept your yes
if we
simply because I
required them
have to
to identify
have another
themselves.
question. What do you think of the notion of auditing after?
I think it's very difficult when you'll accept anonymous letters from people.
If you audit not for the purpose of ascertaining who sent the information, but for determining whether or not the information is so similar that you can conclude that it may not be information that is valid.
We do that today. We categorize letters. Was it a new issue, or was it a letter that was produced by somebody and then mass produced by people and mailed in? We already do that today.
And what about technology? Having the limited experience you've had and with the sensitivity, I knew you would be very sensitive, by the way.
I'm not sensitive to it.
But
Someone challenges your character.
Sir, I would be sensitive were I you, so do not be offended. But my point is, given your level of sensitivity, what about technology? Have you proposed any technology? You're in a key position to propose change, and I'm trying to get some sense of what changes you would recommend.
You know, to be honest with you, this isn't an area I've spent a lot of energy on. We are generally the input version. We post the rule, the data comes in, we analyze the comments, and then make a determination if we want to modify the NPR based upon that. I'm assuming this is probably something that should be taken up at a government-wide level because it's a government system.
We will, but I do thank you for your comments. My time has expired. Without objection, I will enter into the record 2 documents that appear to contradict the Comptroller's response to Chairwoman Waters' questions. The first is his own proposal, which states that a bank will get CRA credit for a, quote, loan to a family-owned corn and wheat farm with gross annual revenues of $10 million to purchase a tractor. The second document is remarks made from the FDIC board member Marty Gruberg, opposing the Comptroller's proposal, saying this proposal would allow a bank to achieve a less than satisfactory rating in nearly half of its assessment areas and still receive a satisfactory or even outstanding rating. Without objection, they will be placed in the record. Again, Mr. Otting, I thank you for your testimony. Without objection, all members will have 5 legislative days within which to submit additional written questions for the witness to the chair, which will be forwarded to the Comptroller for his response. I ask you to please respond as promptly as you're able to. Without objection, all members will have 5 legislative days within which to submit extraneous materials to the chair for inclusion in the record. This hearing is adjourned. Thank you again.